Yeah, if you just, yeah, I mean, it's just impressive. I mean, here's another one, Royal Caribbean, 52%, DoorDash. I mean, we're like half the, half the year so far. Some of these stocks are eBay, 31, Ralph Lauren, 29, Vin, got O'Reilly, it's AutoZone there, of course. Got Ulta, Ford. Wow. Look at Ford. It's pretty impressive. Yeah, Ford, which is 15.86, and we have, and here you have Tesla, which is down almost 19%. Even a GM should be up as well, I believe. It's not here. Domino's, Booking 1310, Hilton 10, Yum, Amazon 5.5%. DR Horton just got a massive pop on earnings, just barely up 4% now. McDonald's 2.96, Nike flat, Expedia flat, GM, yeah, see, GM is flat. I know GM and Ford, they're both in consumer discretionary stuff. What is going on with Ford though? Wow, impressive. What is? Let me check one thing. See which one has a better relatives. So we have Ford, GM, and Tesla. Oh, we can go here. Yeah, there you go. You see how Ford is outperforming these two? So Ford is up roughly 18. This is 3.95 compared to 16, that's negative 16.67, comparing these three. If you look at a 5-year picture, of course, Tesla's gonna be way up there. Mhm. Yeah, I was just, what's gonna do? Oh, we still got, so this was a dip on the monthly bar. This was a dip that we took right there, April, April low. And then from the last 3 months, see, we just have we just have higher bars every single month. Yeah, this kind of a pin bar right there, it's always gonna mark the bottom pretty much. You see, it just has no body. Just a massive pin bar. You see, same thing. But this one has this is a hammer candle right there. Bullish. Oh, July seasonality definitely playing out really well. You look at them right there, based on the performance here, 19 from going all the way back for this year. June was good. June was pretty strong. May was really good. The last 3 months, if you look at them here, see that January was okay. February was almost flat. February is always flat. It's a very choppy month. March, we took a dip down. This is where we had the reversal. That's why there's nothing to see here now. From from here, then we just rallied all the way back up. You see, May is good, June is good, July is good. See, so August right there is flat. So I don't know. Maybe we will be due for some sort of a choppy session. We have a lot of upside. I don't think you're gonna market's gonna give back that fast, to be honest. September is a rough one. September is always this is considered as the most weakest month of the year. This is where we're gonna have our first the first rate cut as well. Keep that thing in mind. So September is have to look out for a volatility. I don't know how the market is gonna react. It is gonna take it's gonna give fake bounce first and then reverse. It's hard to predict, you know. But at the same time, if we're gonna have this rate cut is I mean, I don't know if it's gonna be fully priced into the market because to me, I think right now it looks like because people betting on lower rates that will help small caps and of course will help the real estate market. I mean, I've been looking at real estate. Look what the real estate is doing. It's a complete mess. So this was a dip on April. I mean, it's just if you look at all these monthly bars, it's not something like this, you see? Rising trend took a dip. You see, it's like a well-established trend compared to this real estate. I mean, we'll see if there's some names in there. I mean, Pops will definitely trade. Yeah, I mean, it is making a same V back up, but you have to look at this way, like, okay, so here we have an S&P that sold off, has made a full V back up, right? Now, how many stocks did have made the new high at the same time? We have Netflix did it, of course. Meta, double top. Microsoft is the one, you see. I mean, overall, I'm just these because these are monthly, but it's a very long time, um, bigger time frame. Here we have Nvidia, of course. Google didn't make a new high yet. Amazon didn't make a new high yet. Apple, way down 14.5%. Tesla is nowhere. So, so this market is rallying based on this stock and this, because there's nothing else. Because there's no other stock is making new has made a new 52 weeks high. Netflix did, and now look how Netflix is coming back down. Has a lower monthly bar now. Uh, so let's look at the sectors. Full V industrial definitely is up 17.63% year to date. I mean, it's just insane how this sector is ripping. It's outperforming the entire tech sector. I mean, if we just take a measured move just from this dip to this, we're like crossing 127 extension. The next one up is 161.8, right there, 164, well, 154. It's more 10 more points, I would say. I mean, it can get there the way this thing is going. Yeah, this AI data, all these data centers and stuff, it's definitely helping industrial sector for sure. Technology, of course, way up. Utilities, yes. Oh, utilities took off. I mean, this is a defensive sector. I don't know, like this is these are the utility, healthcare, and the what's the other one? I forgot. This utilities, consumer staples, and healthcare. Yeah, these are defensive sectors. But communication, yes, made a new, 52 weeks high there. Financials did. Materials, no. See how far it is from the previous last year high. Real estate, of course, sideways. Consumers, that's a mess. And there's one, two good names in this sector. Rest is just, there's such a low ATR stocks, and everybody say, well, I will park my cash here on these stocks because these stocks don't really take that big of a hit. Oh, because there's not that big of an implied move is priced into these stocks, so they really don't move much. Energy, it's a complete mess. It's just literally look what this sector is doing on year-to-year basis. It's literally sideways. Energy took off here in 2022. That's when we had the bear market, right? So we had a massive, huge rally on energy. And when since we put a low, okay, in a bear on October 20, the 2022 low, look where this energy has been doing ever since, and where S&P right now is. This is a massive sideways distribution phase year after year, and you have to look at this now. If look at this energy from all the way from here. I mean, we talk about this all the time. Accumulation phase, distribution phase. But you just have to look at this way that every administration comes, nobody want to make it's just like energy has little had was become a inflation hedge, you know. Then the war kicked in, then the oil prices popped, then slowly the inflation coming back down. But energy is just, it's not where back here, it's just going sideways. He's all about drilling, Trump, right? And then at the same time, we just want to make sure that energy prices don't go, because the biggest the concern is higher oil prices is can spike the inflation up. So if they're trying to control inflation, so that to just keeping the energy prices literally sideways, that's what it is. But inflation came down quite a bit. I don't know what the real data is, to be honest. Nobody knows. If you do, I mean, let me know. But just what you can buy um, in energy sector. There's nothing to buy here. There's up 9%, down 9%. I mean, it's just, we'll see how this quarter goes, but XLY making his way up, still quite a bit of far. You see, there are like, what, four sectors we say in communication, utilities, technology, and industrial, and of course, and financials. But the rest of them right there, from here, from material, real estate, consumer staples, which is literally sideways, energy, we talked about it, XLY trying to make his way up, and we have healthcare, which is a complete disaster. Look what the healthcare is doing year after year. See, it's just too range bound. swing is down. This is on a monthly base. Now it's gonna need three. So we have this low, we have an inside bar, we have a higher bar for this month. So if energy gets one more higher bar next month, the swing can turn up. You have a low here, you have a lower high, lower low. So if the swing can turn up from here, but based on a three bar. There are some few names. I mean, it could healthcare is just then you have the biotech sector. There's few names that pop in over there. It's just oh, this is everything as of yesterday close. So I don't know, most the most hated bull market, I guess. A lot of people they just I don't think a lot of people are having the super excited about this run, to be honest. Doesn't look like it. As if you look at like on Twitter and stuff, people are like dying to pick tops, connecting all of these trend lines and channels and this is the yeah, it's just yeah, it's not how you pick tops. Nobody knows where the top is. I mean, looking at this, I mean, this thing can just keep on ripping. Who knows? You know, I mean, if we're just repeating this for years, since 2020, we're at 2025 now. For the last 5 years, you're looking at this chart. It just everything is just literally going almost to the penny with time and price. We here, you here, another we here. Just repeating Trump 1 and Trump 2. So if you really dig, you know, you can that's how you can find repeating patterns. It's only 3 weeks short on time compared to 133 week from this bear market to this bear market. Then from here to here was only 130. But notice one thing, okay? This is the thing that I want you just to pay attention to. Look at this COVID drop, 35%. Look at this bear market drop, 27%. Look at this bear market drop, 21%. What does that tell you? You see these ranges getting smaller and smaller. Even the fact that it did hit the 20% threshold for a bear market, but these ranges are shorter from peak to trough compared to the previous ones. It's smaller than this, smaller than this. So that means that this market is on a higher trend, if you are the Elliott guy, is on a big run to the upside, is where your retracements are always going to be shorter than the one prior degree retracement. Meaning that when you have a one, the higher degree right there, so this market is in a third wave. Now, if you want to go back to a monthly time frame or you want to go to a weekly time frame, this is a third wave. It has not ended anywhere. The only time this market will change its course when any one of the next dip is going to be greater than this one because it's getting smaller and smaller. that's when you're going to see a real market shift because all of these other corrections that you have here, which are there, I mean, there are many of them here, you know, they're like 5, 10, 10%. This is 10% right there. This is 10% right there from here to here. So there's a lot of them in there. This is 5%, this is 5, 6, 7%, you know. So there's a lot of them here for 5 to 10% in between because we're looking at weekly bars. But when you look at the largest percentage declines, okay, as you can see, they're getting smaller and smaller. Yeah, this is based on as much as I know swings and Elliott wave. This is this market is going and it has some room to run. I mean, you have to keep it in mind that this guy, he got in here, right here in the office. He took this dive right there. So he's basically right now if you're gonna take a start from his term, he has only gained this much so far in 6 months, 7 months, whatever you want to call it, 6.5, 7 months. He has another 3.5 more years to go. And his last term, this guy stock performance was one of the best performance out of all the presidents. Keep that thing in mind as well. I don't think I mean, and I'm not making political decisions here or whatever, but I don't think it's easy to bet against this guy, to be honest. The ruthless person is all about the wealth, stock market, rich friends is going to get benefit from it, from Bitcoin to a stock market left and right. This dude is going to pump this market hard by the time he's going to leave. I just these corrections. Well, yeah, I mean, I don't know if we're just getting out 3 months ago from a bear market. Yes, everybody wants to pull back. No, because everybody wants to pick up something that they left. But these stocks are just so damn kind of mixed. You know, this seems like just like a broad rally going, but if you really look at it, a lot of these stocks are just, I mean, we're talking only Microsoft and Nvidia doing all the work. Meta with a double top. I mean, the other can catch up. Of course, they got plenty of time left, but so they are rallying, you know, that's what's adding, fuel to the tank. I mean, fuel to the market. So, so the point is like this guy is not gonna be just going to be satisfied with this kind of an upside from here. The market just breaking out. I mean, we have not retested. I mean, eventually we will. We might not for a long time because any breakouts from the previous high right there eventually comes back down to retest them. You know, you see like right here. So you went up, came all the way back down, then went up. So this is 10%. This is 10%. This is 10%. Then from here, you see market always gonna dance around here. This one right there, it was literally a clear shot of the AI boom. So it came back here, didn't retest, was close, and it just continued to the upside. Then when it get up to that same 200% extension from this high to this low, then this finally came back and retest this high. But it took a very long time. You see the low right there is right at the high of the 2020 was it 21 high. You're gonna get a retest one way or another of the breakout. Very common. Yeah, just you see they just these ranges are all getting smaller and smaller. And this is definitely on a according to the Elliott wave is this is a third wave to the upside. Oh, I didn't even start Motive Wave today. I didn't even I don't think I haven't done any wave counts this week. Apple, it's just a mess. I'm just waiting for earnings now, so we'll see if Apple can manage to make a move to the upside. So I'm hoping that because if we have a diagonal here in wave one, we should have an extension here in a wave fifth. So a good thing about the Apple is Apple has a higher monthly bar. So let's see what they have to say about the AI because they're the one that just lagging, the behind compared to all the other ones. That's why it's very weird to see it where Microsoft is, Apple is just down like almost 15-16% year to date. So we'll see if Apple can get an extended fifth wave here, some sort of make it like this, whatever. Make some sort of a complex, put it here or here, doesn't matter. Can just make its way up. 100% extension 216, 127, 217, 5 versus 1 from here, which is a 219. I mean, if you have to look at this way, Apple is still within this channel right there from the highs. But Apple just has to show some AI love to the market, to be honest. Because the only thing that come in, like, oh, we have an iPhone, it's gonna have an AI integrated, this and that. That's it. They're not buying anyone. They're not like it's not like Meta, like Mari, that dude is spending money like crazy. He's paying a software developer $450,000 a base salary. If you're a software engineer or whatever, developer or engineer, I don't know how these terms in the IT works. With the AI experience, he's paying $450,000 base salary plus bonuses. I mean, like, like some of these companies are like spending money like really heavy. They're buying talent, and then on top of it, about all the data centers and everything. This is why people are getting so frustrated. Is like, where is Apple? You know, we don't hear anything like that. Like they're in like they're buying talent and they're like they're gonna build data centers and this and this. That dude is out there making films, Formula One film. It just I don't know if it's Apple is like to me, I'm a long-term Apple shareholder, don't get me wrong. It's just like because they have so much cash. They're just at the stage is like they just keep buying their shares forever. They're not gonna run out of it, you know? So just Apple is the biggest shareholder of their own stocks, and they just keep paying dividends. But for the product line, it's just, yeah, I mean, they're talking now about making flip phones, so that trend can, you know, will come back again because some people are kind of tired of holding these big bulky phones. I seriously love flip phones. I miss them, it used to be so fun having a smaller phone in the pocket, and now you gotta just carry the whole thing in your hand all the time. So we'll see. I mean, if the flip phone comes back, but we'll see what happens. But that's the case. We can make a bullish case for Apple going into earnings to see if we can get this fifth extended wave and just to come back up, just to retest this upper channel resistance. I mean, it's a clean count. I mean, you have wave one down, two up, and three near this 200% fib extension. Then you got this I have this made this triangulation here, and then just have to trying to see if he can make his way up from the triangle because the Apple has been sideways for 2 months. So I'm going to show you a few stocks that are gonna explode one way or another because they've been sideways for 2 months. 2 months, if a big names stays sideways for 2 months, you gotta watch that stock because it's gonna break out really hard one way or another. In either direction doesn't mean it has to go up. Well, we don't know that, but it's gonna make a move in a third month one way or another. So that's Apple. What else do I have here? MSTR. Um, it has a sell signal, but it has a buy signal in a weekly time frame. Okay, at 300, way down. Okay, that's on a weekly, that's a much bigger time frame. But on a daily time frame, got hit with the sell signal. We picked up a trade when it triggered the buy signal about those verticals, the spread. So we cashed those ones out, and now it just went up and just made his way back. Now it's making his way back down. It is some sort of a correction. This is a pretty clean move to the upside. It looks like I don't know. I mean, I labeled, I believe, yesterday or something. I don't know, make it an ABC. Could be if this low holds, it could be just ends here, and then from here it can just slowly make its way back up. But we need to we don't have a buy signal. So there's no buy signal here. There's no I'm not really gonna entertain think calling like, oh yeah, this is the bottom, we're gonna turn around. Things will turn around from here. We need confirmation. Once we get the confirmation, then we make the bull case. We don't make a bull case when we have a sell sitting on our head. We just simply have to wait. I don't know. The buy signal probably could trigger on Monday, but I'm not gonna know that until the Monday session opens. You know, so signals fires based on a close. It's never gonna fire in the middle of a session. The candle or a bar, it has to close. Then the next day when the market opens, that's when the signal will pop either on for the previous day. So you always remember that. But we don't have that one yet. But if it's gonna come, I mean, we can leave the wave count here. I mean, it's just I don't know. I mean, can leave a little bit more downside here to see if it's gonna take one more leg down or whatever the case is. But if we moved up from this 350s, whatever, this 358 low to this high. If we take this swing, we're just looking at the higher low swing. The higher low swing, 50% retracement is stock is already there, 405. So the percentage travel, distance travel from this low to this high, 50% at 405. So we already tested this. Now it's a matter of like, are we going to come back down here to test this 61.8? 61 points sitting at 393. So there's not really a lot of room, meaning that if you just look at the retracement level, it's not that big of a room here. It's like what, 7.775, it's like what, 11, 12 points between each fib, you know? So we'll see. I mean, time wise, there's some little more time to chew on the clock, you know, the time relationship. Um, but what chart is it? It's a 2 hours. So we'll gonna watch, and if I see signal fired on MSTR, I'll definitely roll the, another vertical spread back with the upside. Okay. I just, to me, I'm just not, I don't entertain and look for upside, but if I have sell signal sitting on my head, it's just how you going to make a case to the upside. Yes, if the price is reversed, which it can, but the signal has to fail, meaning the price needs to make a higher high to fail that signal. Then we can turn things around. Like, okay, fine, signal failed, the low was in, now we can project the upside. Then you can, then you look up. So why these swings, these directions are really, really important. It's not about where that the swing direction will tells you what the direction is for the swing. Is it either down or is it up? Whenever it's down, there's no point to look anything to the upside. It's completely pointless. It's a complete waste of time. If the direction is up, you only project upside. Don't worry about any downside, because that's the direction. It's telling you, is it up or is it a down? Either it's going to be sideways, but it's still going to have the direction, either going to be up or down based on those numbers of bars. Google is good. I like it. I mean, I know it's always gonna chop around here at 78.6, but it's a pretty clean count. It's just going. So, um, nice diagonal one, down in two. Trying to make a case of another 123, 123, 78.6. As this is always going to be a hurdle. 78.6 from peak to trough, right? Is right here at 190. Then we have 100% relationship sitting right there from this low of 162 of wave one down in two and three. That's three versus one, a 100% relationship. The three versus one. Now this third one can end here. It is possible, but we're just gonna leave this some room because there's no sell signal on it, or the swings are all up. If for some reason, if this is going to be all of four, we got hit with the sell signal and the swing turns down, then what we're going to do is we're going to move these ones, this one back up here and a wave one high. Then we'll make the case for a fourth wave come into a place. I'm really hoping that Google can push a little bit more room, push a little bit more in a fourth wave to make a room for this fourth wave. Sorry, the price to push more into a third wave to make room for this fourth wave to breathe. Okay, because you don't want to come and challenge your fourth wave against this high, because this is going to have a clear invalidation right there, because this fourth wave cannot come down this much. So it's always good to have third to have a bit more room. It looks like some sort of a triangle here. And then from there, we'll make the case for the fourth wave, and then we'll look for a fifth wave to complete in this third um, third wave of a one higher degree. Okay, so basically what it is, we're just trying to fit five smaller waves within this one higher degree of third wave, which is starting from this low, which is one, two, three, four, and then we'll make the case of four, and then we'll have a fifth wave. Okay, so Google is good. It's going to be have any dip from there, which is fine, but it's going to have another buy or buy another leap. It's going to keep rolling leaps over and over again in this stock. Um, oh man, this is here we are. I'm just minimizing that to be honest for a while. Here we are, Tesla all over the place. This thing is a mess. Seriously. I mean, the stock has so damn weak fundamental. Okay. What is priced in, what is not priced in, nobody knows. You know, it flushed it down all the way to 78.6, killed all the calls. Now, ports got trapped here. I got another bounce right back up, another rug pull. So, I don't know. It just, the thing is this, I want to keep the second wave here. If this is the low right there from 270, 273, have a clear five waves up here, which is a good sign. Then we have a three down at a pretty deep retracement, which is 7 to the 78.6. Now from here, we can count another five to the upside. And then we have another three now to the downside. Okay, so we just need to hold these lows right there. Now, if I do this, meaning to put a one here, which is there, and then go like this for two, I mean, you can, but this it's gonna be crazy huge second wave compared to your first wave. You know, its stock is range bound and is coiling right now. Stock is gonna pop in one in either direction. Why is that? I'm gonna give you the reason. Let's go back here to this bigger screen. Tesla right now on a monthly basis, on a monthly time frame, is in the inside monthly bars right there. So last month was the inside bar. This month is an inside bar. So we have one more week to go. If Tesla will end the month with another inside month, it will be the first time Tesla will have two inside months side by side. It has never happened before. Okay, you see, you're not gonna see two black bars side by side since the IPO. I ran a whole scan on them before, so I know that. There are inside months along, wherever you see the black bars. There's one here, but you're not gonna see two of them side by side. So the point though, so it has one more week left, right? So we have a high here of 357. So month ends on Thursday. Okay, so we basically have what, four trading days left. So we're just talking about this. So we have a high of a last month of 357 and we have a low of the last month at 273. Okay. We have 4 days left for this bar to turn either green or red. It's gonna turn green if it's gonna go above 357. It's gonna turn red if it's gonna go below 273. If it just stays close to that 300 mark, it's gonna end the month with an inside month. So these are like, this is where you call the volatility kind of compress, and it just waits for the third month to gonna make the move. The so the range is, so we're gonna you can simply build zones now because the stock has been sideways, because the color is now is considered a range bound stock. So you're never gonna get any read, okay, on a wave count if you're gonna stuck with the inside bar. According to the GAN, he always tells one thing: ignore the inside bar. I'm not a fan of it. You know me, that how long that some of you have been trading with me. I don't trade inside bars because they're very range bound. They don't, because basically there's not, then the price is not making new high and is making new low. They're just like chopping in between. So what can, for the next month, if most like to me, if I will have to make a call now, I would say like for the next 4 days, Tesla just gonna stay sideways. It's just gonna end the month, you know, um, going into an inside month. So what we can do here, you mark this high and this high, then you take this low and this low. Now you have two zones for August. Okay, that's how you play two inside bars side by side. Okay, now you're gonna make a bet in August. Okay, it's gonna break. Which zone you want to do? Target. Let me see. So you're gonna have this zone, and you're gonna have this one up here on the top for August. Okay. Now, if you're gonna make a bet, thinking that if you bullish, of course, you're gonna make the bet to the upside, right? And if you want to make a bear case, you make a bet to the downside. So what are the strike price? What are the strike prices that you can pick to make a spread? Is right here. You can make like a 290, 270, 70 spread here. You can do it like 275. You can do 290, 288. Let's say like 290, 275. So that would be what, 275? That would be like a 15-point wide spread, right? So we can do this to the downside. So yeah, buy this one, and then you can do this for the puts. And then for the bullish case, you can do 340. You can do you can do 355 or 360. So if you have a 15 here, either you want to do a 15 here or you can do a 20 here. So if you want to do 360 will be a 20-point wide spread. So if you want to go down to a 355, so it will be buying a 340, selling a 355 debit spread. Okay, so you're going to pay for it. So that's the bull case, and this is the bear case. Okay, so either side is going to break. I don't know which way the stock will swing, but one of this spread is going to play out 100% of the time. But it's just a matter of which direction it's going to go to. That's the challenge. That's the bet that you're going to make. That's how you play two inside bars. So this is a strategy that you play, but you have to make a bet on a direction that if the stock has been coiling, basically has been sideways for 2 months, what will be my strike prices, and what is the and if I would make a bull case, what I'm looking at to the upside, and if I'm making a bear case, what I'm looking at the downside. Okay, so you just take two lows of those two monthly bars. That gives you a pretty well-defined risk because you basically right now, right in the center. Okay, so you're basically buying a call out of the money, you selling one further out of the money, and you're just buying one down here, and then you selling one here, and you're buying one here because you're making it to the downside bet. It is just the opposite. So this is the range um, that that is going to play out. So I'm going to I can leave it here like this. I mean, I know what to look for, but this is something for you to uh, to learn. Okay. So they are. So this is wave count. To be honest, a complete wastage of time. I really don't want to spend much time there just to keep changing the goalpost. Wave one or wave two. Nobody, you cannot do anything when a stock is like this for 2 months. No wave count is gonna give you any read. You're just completely wasting your time. Other stock right there, Eli Lilly. You see, it's been sideways for 2 months. Do the same thing here. Mark the high, mark this high, 825, 850, 25-point wide spread. And this is your downside. 730, 709. So you have a 25-point wide spread to the upside, roughly 30 point, no, 20 points to the downside. It looks like that is going to take out the 825. It's getting pretty close, right? Still has 4 more days to go because the previous two bars, so candle bar doesn't matter, were inside months. So this is a unique, one of a kind strategy that you ever gonna come across. Okay, because they're not there are not that many stocks out there that have been sideways for 2 months. So you do um, find them by running a scan because you're not gonna find them on your own. It's gonna take you, I don't know how much time you're willing to spend. Is to find two inside months. This is one way you can make a bet on either direction. You know, it's a great way to make trades. But at the same time, you're not gonna. We can find one. Let's see if I have. I thought I had a. Here, I have two inside weekly script. 500 month. Let's run them here. There you go. So we have Tesla, Eli Lilly, CPay, and Best Buy. These are the only four stocks in the entire S&P 500 out of 500 stocks. You see how quick it runs scan that are in the inside month of the last 2 months. We already looked at Tesla and Eli Lilly. So this is another one right there. What is that called? CPay. So we can change it here to CPay. I don't even know what company is this. Same thing here. You're just betting this upside right there. A pretty tight range here. And then you have a double bottom here. Bottom. This most likely is going to go on a third month sideways as well. And then the last one we have Best Buy. See, two inside bars. It's very rare. You don't see them that often, but the two exist. But I'm sure these are the two top names because everybody's chasing around, right? That's the leader of a healthcare, and this is the leader of consumer discretionary, XLY. So that's the that's the play for August. This range and this range. Then if either side breaks, we can always project the downside. I'm sorry, we can project the downside and upside. But the range has to break first. That's it. There's nothing you can do until one side gets it's um, plays out. These are high beta stocks. So they're not gonna go into a 3 months of a sideways up. So we'll look out for some sort of a news or some sort of you know, because a lot of, I believe, Tesla got downgraded yesterday, of course, after earnings and stuff. But for the last 6 quarters, they haven't showed anything. I mean, it's like you could have a best product, but if the product is not selling, I mean, something is not right, right? Tesla's selling everybody on the robotaxis and stuff, and we're doing this, and it's not even a car company, it's an AI, it's a tech this, and I don't know what this story is. Every single day there's something about Tesla, we all know that. But it's just like Tesla will be a $20 trillion company. According to him, he's just making it. He thinks that the Tesla will be 20 trillion. $20 trillion company of Tesla, the $316 stock will put the stock, okay, around, do the math, 63, 16, 20 trillion, 20 trillion, three. It will put a price right around like 62, 62, $6,300 on the stock at 20 trillion valuation for the company. Market cap, sorry. 62, 6,300, right around there. I would be close. I got a pretty good with math. 6,000, call it 6,000, round it off. So you can see NVIDIA just made a $4 trillion market cap. It's talking about 20. I don't know when. See, these are the things when a CEO tells their investors that's what they believe, and that they believe and they invest. But he didn't know that. According to him, he always says one thing that Tesla will be the most valuable company in the world one day. Well, right now, it's in 11th spot. This 300, I believe, is a 311 or 312. It's going to be very close to that number. It's either 310, 11, 12 price keeps the market cap at 1 trillion. Keep that thing in mind. Okay, so every time when the Tesla dips down to that $300 level, it loses that $1 trillion market cap crown, but then it's gonna try to push right back up there to 11 to around that 311, 312 mark is to keep that 1 trillion number. Pay attention to that because once the market cap, once the company hits the trillion mark, it's always gonna fight that number. It's trying to maintain that $1 trillion, you know, market cap. So Berkshire 104, TSM, look at Broadcom. I remember Broadcom was some around there, 13, 14 spot. Look how much it jumped. Love this company. That's what like. These are quality names. I mean, making a case for the other semi stocks, you cannot. Like Lamb Research, Texas Instrument, like these companies are just look at their earnings. But these companies are making so much promise. Oh, we have the AI demand and chip and this and that. But in the end, they are the ones eating everyone lunch. Bigger companies always gonna outperform. Look at Nvidia right there, Broadcom, TSM. That's it. There's no AMD here. I don't even know what AMD is. Costco at 414. You know, ExxonMobil at one time was the most valuable company in the world. Not anymore. Look at Palantir at 23rd spot. It just jumped up three positions yesterday over Bank of America, Procter and Gamble, and Home Depot. Yesterday it's popped 3 points. It overtook this 370. Now it's at 374 now. They're very close. Netflix is at 5. Yeah, I think to me personally, I think it's an overrated stock. Um, Oracle, Eli Lilly right there, 729. Walmart. Did you see the one link that I just posted up on the chat last night? That of these companies that how long it take them to make $1 million? Walmart makes 1 million in every 48 seconds. Think about it. 48 seconds, it can just happen like in the next 48 seconds, you can just count from now. They make $1 million. It's crazy. Amazon, it took them probably like what 1 minute and 1 minute and 5 seconds to make 1 million. It was a pretty good link, and you should see that video. Interesting. Look at Microsoft 381. Look, Apple 319. Then we have Amazon 245, Google 2.3. This is a cheap stock. I'm talking about Google. I have a lot. If you notice that, it's a dirt. This is a cash machine. Okay. Sideway range. Now you know exactly what you are looking for next month. Just mark this one. That's your bullish bet. This is your bearish bet. Weekly has a sell signal. Daily has a sell signal. Keep that thing in mind. But that doesn't mean that the signal cannot fail. It can fail. Okay. But if the price makes a push on those, on a day, this is the monthly time frame. We're looking at a 1 monthly candle. So based on a weekly or a daily, signal can fail as well. Okay. But what can happen, well, we don't know that. All I see what is right in front of me. If it has sell, it means that it is a sell. It has not failed yet for me to buy something. So I'm just going to stay neutral, okay, if on a stock, and just wait to see if I see something, and then we'll pull the trigger. Just we'll watch. We just look for other trades in the meantime. Doesn't mean that we have to be in a Tesla all the time. If the stock is range bound, leave it alone for some time. As soon as something triggers and look good, I'll put the trade in right away. But it's there's no point for chasing the stock every single day. If you invested, fine, stay invested. Okay, you don't have to worry about anything. Now, if you just well, now if we're gonna fight options, well, that's where the time gets, it's gonna come and get you. So yeah, there's no point waste any time on uh, on charts. Keep everything simple. Mag 7, okay. Netflix is weak. We already know that. Meta was pulling back. Now it's gonna wait for earnings. Microsoft, Apple is, but earnings can change things around. So don't rely on this RG to be, the to exactly play out. But we don't know which way the stock will swing. You know, The Apple right now is damn choppy. The reason for it, which I can see it here, why this stock is like this. There's no alpha. Is because the stock is sitting almost at the close to the benchmark. So when a stock is gonna be in this kind of a range to the center point of this RRG, it's literally not gonna have no alpha. Okay, those are the worst trades that you could possibly trade. You want to find something that is further away from the benchmark, meaning that if the price, sorry, the meaning that the price is going to drop a lot further down. Why? Because it's pretty much it's pretty far away from the benchmark. Same thing right there. When it's going to go back up, it's going to make a much wider rotation. It means that the stock is going to have a lot more upside. Okay, this is what we do every single day. RRG, we find momentum. We look for alpha. Alpha generate what? A signal. When signal fires, we fire. That's my trading model. Okay, as simple as I can get. I run scans. Stock pops. Depends what momentum and alpha shows. Confirmation gets from the other technicals on my other screen. I will put my money on the line. I'll swing it. Signal will tell you exactly to the penny where you're going to set the stop loss. Let the trade work. There's nothing you can do. Just to wait now. Shares is a lot easier for me to buy, okay? Because I buy a lot of shares in different companies, okay? Is if I take a signal, right? Signal fired here, let's say at 50. It gives me a stop loss, let's say on this one at 40, right? So I could have like two bars or 3 bars. Normally that's what it is. That's how I set that thing up because I don't want to take a wide risk per trade. So you have 10-point wide stop right there, right? While I have those fibs, I know exactly what my upside is. It could be 70. I don't know where the fib's gonna land. I'm just gonna give you just like a random, make an example of this. So let's say from here, a signal fired at 51 price, right? So the 51 from here gives me a stop loss right there of 11 point. Now I have 11 point worth of a risk to the downside for this signal to fail if it goes against the, if the price goes against, meaning that the price goes make another lower low, signal will fail. It's a bullish. Now we're looking for this, meaning that we need to pull up in a one full swing, make a higher low, and then we need to make a higher high. So I have an 11-point risk to the downside, and then I'll set a target here, and I'll set a target here. So what I do is normally I'll put an OCO order. One, cancel, and another order. Okay. So these orders you can just simply do for good till cancel. So you bought 100 shares at 51. You defined risk by 11. So you have $1,100 worth of a risk that you took buying 100 shares. So if you're wrong, the computer automatically is going to kick you out. And if the price from here goes right to the 70, so I have a 70 to the upside and I have 40 to the downside. Whenever that stock,
out. P16.
wow.
Track limits.
So when you have 70 right there, so if the price reaches 70, the computer will automatically execute all your trades and you get out of the trade. You don't have to do anything. This is the model that I always wanted for trading. To keep everything simple is just to take an entry here, set a stop loss here. That's the order. Put an order in, good till cancel. It's gonna sit there for months. It could sit there for a year. The order is not gonna get canceled as long as you're gonna change it to good till cancel until the price hit a 40 mark, or either it's gonna hit a 70 mark. Order is gonna sit there. It will execute your trade. Options are different because we have to watch the spread, how to make a spread, how much time do we buy in, and then we just gotta have to see if we're gonna, well, we need some money on the way, on a shorter basis as well. So we just have to see like, okay, which one we can close, and then when and which one looks really strong that we can just let that thing ride. So it varies, but that's the model that we're working on, and this is where we're gonna be. But this is what we're gonna be doing in next month. So next month, the plan is we're gonna make 3 more channels. Okay. So we're gonna do three more channels. Okay. So we're gonna I'll make another, like I can just have to make them like 3 more. We're gonna make one for weekly signals. We're gonna make one for daily signals. Okay. So I'll name them as a weekly signal. Now, weekly signals are gonna be either very long dated leaps, okay, if you want to do through the options, or if you don't trade options, because a lot of you guys who send me messages on the site all the time, I like to buy shares, and there's quite a bit of guys that really are into options. They just don't want to do options at all, which is fine. So what I'm going to do is I'm going to set up a weekly signals for a long dated leaps. Long dated leaps meaning that you're going to go out at least 3 quarters. Okay. Or you can go up to a year. But I will highly recommend you to just do spreads. That way you're not going to have literally no time decay. Okay. So those weekly signals obviously is going to have a stop loss. As same thing as we're going to take every trade is going to tell you exactly where to put your stop loss. But the weekly time frame is a very long term. Okay. So those weekly bars will be just a one bar for one single week. So those trades can last you months and a couple quarters. Okay. And then we'll do one for the daily signal. The daily signal will have same swing trading. That's what we do most of the time anyways. And then I'll make one for 1 hour. Then we can use it for in case if we have to swing something on a very shorter time frame, like an hourly signal. Sometimes I do take those, only if I'm in a mood, to be honest. I'm not gonna lie. Okay, I don't like to overtrade. I do watch them on my one monitor. All the hourly stuff fires back and forth, but you just have to be a little more careful because the shorter time frame, at the same time, you just risk in the previously hourly bar low as your stop loss, and the price can change really fast on you. Sometimes it holds, it goes pretty quick, pretty well. So it doesn't. It can go either way. But so that's what we're gonna do. We're gonna do weekly, daily. Okay, that's where we normally find signals all the time, anyways. And then we'll do 1 hour. So we'll have 3 time frames. I'm not gonna waste any time on a 15-minute time frame or a 5 minutes or a 1 hour. If that's your style of trading, you're free to do so. That's not how I look at things. I mean, what my plan is that service will be purely, literally all automated. Okay, it'll be a lot less charting. I'm not making any wave counts for nobody in the middle of a session. Don't ask me for them because you're not getting it. If you need a wave count, either you get up in the morning, okay, ask me, I'll make one for you in the pre-market, or you ask me after the market closes. I'll make one for you. You're not gonna ask me. Hang on. Yeah, I text you the label. So I'm not gonna make any wave count, check the Gann swings and this and that in the middle of a session. Okay. It's a 6.5 hour session. I want to find trades for everyone. Okay. So I want to stay focused. I have my scans, which I runs on Optima, which is on this screen. Then I take them down to the other screen. Then I'll find myself the entry, how to structure the trade, how long we're going to go out on time, and we're going to take a shot. Okay. If the market is kind of like really choppy session, there are days like this, there's nothing really moving much. Fine. Those are the days that I can always look up things here and there. If you are watching a certain stock, okay, thinking like, hey, can you just pull up that chart? I can instantly pull that chart for you, what the direction is, okay, off the chart. Either it has a buy signal on it, if it has a sell signal on it. I will highly, highly recommend you to, if it has a sell signal on it, don't act or desperate to buy something. What if it has a sell signal triggered on, meaning most, because if it has a sell signal, it has a 100% guarantee that the swing is down now. Okay. So if you think like, well, I can get myself a cute entry because the price is lower, okay, fine. You can get lucky and then the things can turn around for you. But we're not buying anything if I have a sell signal sitting on my head, meaning the swing is down. Okay. We're just going to keep looking other stocks to see which one looks good that we can buy if we want to buy. We're not buying anything if it has a sell on it. Okay. Unless you just want to if you want to play the downside, you're free to do so. So if you need a chart, I can instantly pull the chart. These are the things like session is going, I'm watching, because when market opens, you all know the volume kicks in, everything opens up. I need to concentrate. I need to watch. Okay. I have 6 accounts to run every single day. I have to manage a few things as well at the open. What I'm watching, which one I have to, There are positions that I reduce size, there are positions that I take some partial profits, so I have to make some adjustments. I can't pull these charts left and right, especially in the first hour. So don't ask me for it, please. Okay. After that, when volume kind of dries out, after an hour or so, then I can pull up any chart for you. Nothing is going to happen for that first hour. Whatever you have open, you should be watching it yourself. If the trades are working, well, I'm watching obviously and see how it goes. So that's gonna be, the point is that it's the charting is gonna be very limited. I'm not saying that I'm like totally giving up on everything, but it'll be very limited. Okay. I want to find trades. I want to make money. That's my goal. Finding trade is not easy, what it looks like. I don't just randomly buy stuff because two guys on a Twitter has some order flow going and one guy is completely biased about a certain position and he's just telling everyone to buy. I don't make those decisions this way. I look what is exactly in front of me and then I'll take a shot. And I don't hesitate to take a shot. I'll swing a trade. One way or another, $300, $400, $500 risk trades for me is nothing. These are the risks that I take all day long. Okay, so you just have to define risk to see what is comfortable for you. I cannot make the decision for you because you all have a different size accounts. Okay, you have to define risk to see like, okay, you need to see what the entry is. Where my chart went? Let me show you actually on the chart. Like what my entry is and exactly where the stop loss is going to be. Okay. Let me move this one here.
Mo, could we maybe do another channel where people are requesting tickers and then you put the chart there so that like let's just because then the main feed gets so cluttered that like let's just say on Monday somebody asks you about Tesla. On Tuesday, I don't need to request it again. I can just look, oh, the chart's there already. You know what I mean?
Look, your Mag 7, like especially main stock, we're always tracking those. So conversation and the market always going to be moving based on those big names. Sure, there's a lot of um uh, time, like I have some of you guys trade some stock I never even heard of it, to be honest. It's it's like, okay, I was like, I'll pull it up. It's not a problem. But me, like personally, like I like strong companies, as you all know my style of trading. Okay, there's hundreds and thousands and millions of different type of traders out there. Okay, what they like to trade. I like quality names. I always talk about this. Okay, it's not like um a $2 stock that can go to a $4, okay, will pay any different than if I buy something at 260 and ride that thing up to 280, 285. It's the same thing. Okay. It's just a matter of like how fast one stock has moved against the other. That's what it all comes down to. Okay. Other than that, your delta on every option depends how you position it, will remains the same. So I like quality names, better fills, better volume. It's just better bid and ask, much easier to make different type of strategies and stuff. Like I see a lot of different signals. Don't get me wrong, I see them, but then I go back and look at the option chain. There's no liquidity, and then I don't want to get myself put somebody else in a trade where you risking $2,000-3,000 and you just got that you get in, and this is going to be a literally pain in the ass to get out of the trade. It's hardly any liquidity, and those numbers kind of like stock is kind of like sitting flat and they're just like moving a couple $100 up and down all the time. So like this is CRM, right? We took this trade, and now you have to understand one. So once you're looking at this screen, okay, I post this thing on any stock that you ask me all the time, right? We trade in the direction of the signal. Just remember that. So this week, if we recap, what was the funds that failed? We only had one signal that failed this week, which was this one, Wink, right? The stop loss was at 308.53. Signal fired right around here when I took a shot, right around here against this low. You look what happens. Now the swing is down, right? So what? I took like what, $365, $70 loss, which is fine. But I exit the trade right away. As soon as the alert went off, I just closed the trade. Would have taken a lot more beating. I'd be like hoping like, okay, yeah, now the things will turn around. Now the point is this, that the screen right there originally had a sell signal since 6/13. Look at the date right there on the bottom. So the signal triggered on this daily bar on the 13th of last month against this high of the previous day high, okay, which is the high right there is going to be the stop loss right there. So you risk in whatever you get to get yourself an entry is, but the point is we need to find entry as close as possible to the print that we're looking to trade to the downside or to the upside. Okay, closer and closer we're going to find an entry, we're going to minimize our risk to the upside and to the downside. If we're going to get ourselves in here, now you're risking from here to here. The signal is valid. It will remain valid. The price can go up here. That doesn't mean the signal is going to go away. The signal will fail once the price will take out this high, because that's where the price will make a higher high. Signal is no longer valid. Okay, let's talk about this. So signal fired here. Now you're not going to see it anymore because it's gone. So signal was here when we took a trade. Okay. So I made a spread. So what is the first thing that we look at? The first thing we look at is the month was up or down. It was up that time when I took the signal, right? It was an outside week. Yesterday was down. There's two things we're going to have to watch: 50 and 200 EMA. These are the only two EMAs that you need on a daily time frame. No other time EMA. Okay, 50 and 200. Now the DTR is a daily true range versus an average true range. The stock moved yesterday 5 points. Average true range for the stock was 11 points. So it's only completed what? 48 points. So when a stock is trying to push to the upside, if it has 68%, 72% of what it changes, I watch them, whatever stock that I'm in. And if it gets to a 100 is where the stock is most likely is gonna take a pause. If it exceed 100% mark, okay, it's gonna turn red. It can go up to a 110%. It can go to 120, 130. But it depends at what time did it get there. Let's say it makes a move up to 112% to the upside. It completes the ATR. The most likely for the buy by the close is the price is gonna just take a stall, and it's gonna come really close to the expected move. And it's gonna end the day over there. Because there's no bar, it's just gonna go for 6.5 hours straight up per session. You all know that. So that's the expected range of the move that we're looking for. So anyhow, so it triggers here. We use this as a stop loss against the buy signal. Now, if a stock is trading above the 50 and a 200, okay, go out 30 days out in expiration on a spread or a call, whichever you want to trade. Okay. If a stock is trading below the 50 and 200, it goes 60 days out on expiration. You always gonna see me making these trades with time frame. I don't know if somebody ever pay attention to it. Just remember that. This little white line right there is a 200. This brown one right there is 50. I can remove it if I want to, but I just like to watch it. But the same exact print to the penny is right there. Okay. 50 sitting at 321, 200 sitting at 307. And the price is trading below the 50 and 200, these two banners is going to be red. If the price is trading above, it will be green. When the day is down, it will be red. When the day is up, it's going to be green. Day is going to be inside, is going to be yellow. When the bar is going to engulf, meaning that it's going to have an outside bar, because it engulfed the previous day and high and low, is going to show day engulf, either a week or day, whichever the case is, or a month. So these are the ones that changes colors: red to green to yellow to gray. Okay, so you have to watch this information every single time when you're going to read a signal. What are you trading? What are you going to bet and what are you going to put making a bet on? That's the information right there. That's what I need. I need a direction. I want to know how the month is going. Then I want to focus on the week that I'm trading, how the week is going. If my monthly time frame is up, meaning that the price has already made a new high, it has a pretty good chance that the price is going to hold somewhere around the previous month low, somewhere. But that's just not the case here. Okay. Price retraced here. Exit the trade. We're done. Now what happens is the buy is gone. We don't see it. So what happens again? Meaning that this sell signal, which was triggered back in 612, is still valid. Okay. So this sell signal does not gonna fire another sell signal for you. It's always is gonna be another buy though. Sell to buy. Then you get the buy to sell. You don't get a buy here and then another signal fires here to buy here. No, it doesn't work this way. Buy is always going to trigger the next one, is always going to be a sell. Then it's going to have another buy. Sell never going to have another sell. That's how signal works. So in this case right there, this signal right there from the very top against this high right there is still valid. So now it's still going. So we already made one attempt that we failed. Now we're going to have to wait and see which daily bar triggers another buy signal. Then we'll use the same stop loss and see if we can go right back up the second time. If a signal fails the first time, second buy signal is going to have a very high probability for the price to rally. Just remember that. Okay. I've taken a lot of revenge trades over the years by doing it. If I'm going to get stopped out here on a certain trade, I know I don't have any buy yet, but it will come event. Well, I don't know which day is going to come, but that's what you have to watch every single day. You just pull up a ticker. Is something triggered yesterday bar or no? Because that will trigger on a previous day bar. Okay. You never know. This could be a buy signal right there. I doubt it, because now the price is already below below these two, so it's going to take a little bit of time. Plus, this was a pivot mark right there anyways. So this price might test the 292 number right there. Okay. Now, this is all the risks that we define to the downside. What is the plan now? What is our target? Where are we going? Okay. We have multiple zones that we can target. We have zone 1, we have zone 2, and we have zone 3. I don't know that, neither do you or anybody in the world, that how the price is going to go and how far it's going to go. But we have a plan. We have a plan that we're going to set up, we're going to define our risk, and we're going to target our zones. Okay. So these are the zones that we have that we need to target, but don't expect this melt up when you don't have an ATR giving you this kind of an expected move to the upside. So there's no point to be chasing this much upside when you don't have an expected move there. That's one. Second thing is this, that once the price breaks below the 50 and 200, the price gets under pressure. Now you see yesterday the close was below the 200 on this stock, okay, which hasn't done it since $5.14 until this bar. So it has spent a lot of time rallying up and then giving pretty much everything back, okay, and now it finally came back below the 200. So what we can do next, we're just going to watch and we'll see what the next one triggers, and we'll take another shot. I like this stock. The reason why I mean is because this stock has a lot of buy rating, okay, from like major banks, like we're talking Goldman Sachs, JP Morgan Chase, and there's a lot of other firms. They have a lot of buy rating on this stock. I like this stock, okay? Don't get me wrong. I'm going to swing it another one. I'm going to just remove this one because I just want to left them there to show you an example. So I'm just going to watch and see if we can pick another entry later on. So as a nice move to the upside from here, as you can see, this was a very nice buy signal that triggered here. So it's the same thing here. Same concept. So this daily bar closed here on a 422. Signal fired here on signals, not here. Signal fired on the next day, right there. When this bar closes, it fires for the previous day. Okay, it doesn't because you have a session going here. You have to wait for the next day. Then this will pop right there. And then against this low right there. So if you get yourself an entry right around 215, 216, 217, somewhere around there, okay, your downside risk is at 206. Well, once you are in a trade, when all these fibs and the price is going to be stacked up here, you don't know the price is going to rally this much, first of all, to begin with. Okay. But at the same time, if you get yourself in, if you believe the company, like, a company fundamentals are strong, okay, it had like, like if a company is strong, a stock can rally, it can perform. And then at the same time, we have to watch what? 50 and 200. If we're buying something down here, well, you know that for a fact that as soon as the price is going to come and hit the 50, it's going to face resistance. Okay. First, it has to pass this hurdle. Once it's going to clear this hurdle, then it's going to go back to the major one, which is going to be a 200. And you don't break 200 instantly when you coming back up. Same thing when you're coming back down as well. You're going to take a pause. So those ones are act like a very strong resistance coming back up as well. So once if the stock manages to clear those, okay, when this basically this little green band that you see right there, this is not some Ichimoku cloud and stuff. There's a lot of stuff behind it. Okay, once that the price starting to trail above this green band, that's when the price and it goes above the 50 and the 200 is when the price goes. That's when it's going to pick up a really strong momentum to the upside. Okay, because you're buying something when this band right there was red. These are like a bunch of VWAPs, like there's some lot of stuff in there. Okay, so then from here, you ride this thing to the upside along with this blue line right there, which is your ATR line right there, average true range. It's not some moving average and stuff. This is ATR. Every single day from high to low and stuff, you see, come and hits the ATR, bounce, came back here. So any day, like it's gonna come close to it. Depends how the day goes. There's a lot of time that the price comes in, completes the expected move, and then it continues the trend. So that's how. So we did this signal, right? The nice trade. So that was a loser we talked about this week. Now we talk about the winners. So I took this trade somewhere around here in this bar, right here. And the reason why I took this trade is because of the RRG, okay? Relative rotation graph was looking really good. That what it pulls pops on a scan that is heading toward the northeast direction from the lagging quadrant. So that's the confirmation. That's where I need to find momentum and alpha, okay, to see how far we are from the benchmark. And then from there, if it's something triggers, those are the ones that trade that are very high probability trades, right? So we have momentum, we have alpha, and we have a clear buy signal, and we have a defined risk where we can put the stop loss right there at the bottom. Okay, and there's a fib right there, so it's blocking them because right there you can see a little shade right there. So I set a stop loss on this one is here, and I get myself in here. So I was like, okay, well, I'm in at what, 129-ish, 30 kind of price. So I'm down risking 6 to 7 points, 6 points or so from here. So you define your risk from here down to this low. Because as soon as the price is going to make a new lower low, this thing is going to fail right away, instantly. I know that for a fact. But that's fine. So set a stop here. Now, well, look what happened. For how many days that we just went sideways. Why is that? You have to understand this. Why is the price is going to go and it's going to take time? Why we're buying 60 days and except 30. We're buying ourselves time. We need 60 days. Why is that? Because price is below the 50, price is below the 200. So this buy signal below these two averages, especially in this red band, can play out, okay? But it's going to take some time. It's going to torture you for some days. So what happened here? Look how close it got. I mean, did I panic? Did I say, like, well, I want to just cut it out? Went negative on a trade. Well, all did. So like didn't, okay, fine. It made a low here and just kind of bounced right back up from here to here. I was like, okay, fine. It's just, we'll see how the bar will close now because of the daily bar. I'm not looking at a 15 minutes attempt. There's a lot of smaller time frame signal fires in a one single bar, right? You have to remember that. But this is just the open, close, high, and low. It's like, okay, let's see where it closes. So it closes the end of the day. I was like, okay, fine, we'll just wait. I'm watching the RRG as well. I was like, okay, let's see if the tomorrow rotation improves a little bit or something, what the case is, and then we'll see, we'll go from there. Signal is valid. RRG looks good. So now we wait. Now we got the rally right there. So this was what happened here? Oh boy, where's my okay. This is my wife's account. $1,769. So it came from almost 130 all the way down up to 138. Nice trade. It was like 5-6 point worth of risk. It's like that's fine. I like these kind of a risk play. I define them that way. I want to take something this wide and marry to that thing forever. You either in or you're out. That's it. Just wait for the next one. That was the plan on this one. Now I cut it because we're right here, that 200 mark. So you see now we're above the 50, it turns green. But we're still below the 200, it stays red. If it crosses above the 200, which is fine, it can, but that's I looked them as a swing trade and has paid well, and we'll just move on. We'll find another one. Now, if you own shares, some do, you just hold them. So it depends where where you wanna take your money. And I mean, the thing is this, now you have $1,700 right in front of you. Can you grab it because it's gonna face a major resistance here at 200? So you're willing to give back $500, $600, $700 if the stock pulls back. You don't know that. Signal was good. It tested our nerves near close to this low, but played out. What's the other one we closed? CRM. We took this one, right? Now, the reason why I closed this one, okay, is that first it was this buy signal triggered below the 50 and 200, as you can see, that time when we were here. And this stock has an outside monthly bar. Okay, so meaning that the stock has made a new high and a new low compared to a previous month. So when you have a stock that makes a high and low, meaning that engulfing bar, what you want to call it, I call it an outside bar. When you have an outside bar, the stock just stays pretty much range bound throughout the whole month because it has already made a new high and has already made a new low. It just stays in between. At the same time, when I looked them up, I was like, okay, well, we're below the 50. I was like, okay, I'm going to try to see if I can get up to a 50 mark close to this yellow line around like this 270 mark, So then I was looking at the 1 hour extension on this one. It reaches that 200 mark. Come on, right there. You see the 271? You You see this 271.44? That was a 200 fib extension. So it got up to 271.10. It was really down close, and then it just kind of backed off. I was like, okay, time to ring, time to get something. It still has a buy on it. Fine, it could kind of make his way out or whatever the case is, but I'm talking about a swing trade. It's not like something that I bought shares that I'm planning to hold forever. Okay. This one paid $556. Now, keep in mind that I run my wife's account. I have my own personal account as well. Okay. So I do two trades in the same time, one size a little bigger than the other one. So of course, what I'm going to lose on one side, I'm going to lose on the other side as well. But there's one account has bigger risk. Sorry, the bigger size, not the risk. Risk is the same. It just depends on how you structure the trade. So that's where we closed. Okay. What else did we close? McDonald's. It was a little fun little butterfly. Now, McDonald had a mean reversion sell signal since 718, as you can see right there. So I set up a butterfly on this one, took, I believe, this low, or what's going on with this mouse? Right here. No, it was this swing, not that swing. Right there. So I made a butterfly to see if we can pin this 295, the body of the butterfly. So we sold 295, and then we bought 290 calls. So we're long 290 in the money. We sold, sorry, this is going to be a 16. Jeez. So we're double at 295. So that was the body of the butterfly. So then we're long 290. And we were long 297.5. So I structured a butterfly based on these three wings. So we're short twice as many in the middle, and we're long 297.5 calls, and we're long 290. So we're 8 plus 8 is 16. So we're long 16 calls, and you short 16 calls. So you make a butterfly. So I was looking for this because this close right there, which was Thursday close, you look at the close right there. That close was at the body of the butterfly, which is that right there, at that 295.5. Now, there comes the last day. The last day of the butterfly is very dangerous. Why? Because this is where you're going to fight gamma with delta. So we're right there at the body of the butterfly. Now we have to kill 6.5 hours to see where the price is going to close. If it's going to close to the body of the fly, which is going to meaning that what we're trying to do on this butterfly, you want to keep the 290 calls, which is down here, in the money. You want the further out that you bought calls, 290, 297.5, which is somewhere around here, and this one in the center that you were short, to go down to 0 until expiration. Okay. So the premium that is going to melt from your long and your short, okay, is the reward that you're going to get. but your 290s are the ones that are gonna stay in the money because they have a lot more intrinsic value. Okay, they're deep in the money. Now, if the price pushes up, meaning that all of these calls that you bought all went in the money now, because now the price went up to 302, because 302 is higher than 290, 290, 295, and 297 and a half as well, right? So meaning all three of them is going to go in the money. So when they all three goes into a money, meaning that your upside is going to be either going to be a loss, that you're going to start losing money, or how you kept the upside at how much you capped it. So I took this trade. So I took this trade, structured it this way. My upside was capped at $55. That was my upside risk on this entire butterfly. Okay. So like if McDonald ripped all the way back up by Friday, last Friday, yesterday, if I'm gonna end up going all the strikes are going in the money, the most I can lose is $55. Okay, so I define the risk by keeping it at $55. If I'm wrong, that's what it's gonna cost me. So then yesterday, this was Thursday close. Look at the close right there. I was a little excited. I was like, okay, we're right there. Now is gonna be tomorrow is gonna be it's gonna be the battle day. We'll see how it goes. Then yesterday we put a higher bar. I was like, geez, you can see right there. You see, that was the high yesterday, and then this was the high. Here's your 200 EMA sitting right there. And you can see what the stock is doing. It's fighting this 200 for weeks now. Okay, McDonald's, you can see right there, because look how much time is spent to the downside from here. Okay, and then you see what the stock now look what the price is doing here at that 200 mark. It's giving a lot of promises, but not really. It's not opening more higher bars. It's keep chopping around here. I was like, okay, if 250 is going to put a pause on it, if I'm wrong, okay, if McDonald's are really going to rip through it, I'm going to lose $55, right? If I'm right, and if I manage to close this butterfly near to the body, which is the 295, I'm going to hit a jackpot. So that's the trade that's how it was structured. And then yesterday, I looked it up in the morning. I was like, gee, the thing just popped. I was like, okay, oh boy, this is the guy a higher bar right there. So it went up 3 points. Then what happened is just when the price took all the way back down to this low right there. Okay. Right there at this low, because we still have more time, because we're coming real close to the body of this thing, because that 297 and a half calls that we had, they're getting hurt now because we're a long 8 of those, right? So when the price reverse back down, that's gonna get hurt really bad, because of the very short time that we have now until the close, and you're already long 8 calls out of the money. So they're gonna just literally wiped off those premiums pretty quick. That dip right there, I was like, okay, on a higher bar, I was like, I think we're just gonna cash it out. So then I was like, okay, let's close the trade. And look what the price closed. If I would have held it, meaning that just let the thing expire, I would have lost $55 on the trade. Meaning that because you see the price closed at 297.47, because our long calls here was at 297.50. I was long 8 of those. So meaning that all of those 3 strikes closed in the money yesterday. Would have lost the whole trade. But that dip right there, back here, okay, gave us that payout. How much did we make? $412. You see what happens here? You negative delta, you negative gamma now. So you see this is what happens because you only positive theta big time because it's the point is like you want to make anywhere the price close between this range. You don't want to go down here. You're gonna hurt this. It's gonna get hurt. If the price stays here, okay, you're gonna pay out. The payout is really good. If the price gets out of the way, meaning that all of those three calls, like let me show you this other guy start doing these butterflies now. So like you gotta go a little easy. They're very tricky strategy. You need a lot of practice with these. I trade butterflies all the time. Let's see. So so we're long eight. I did eight. I'm just giving you an example. 297.5 calls. Okay. Eight of those. Then we sold 16 of them at 295. So we're long eight, short twice as many in the middle, and we're long 290. Eight of those. Right there. So now what we're looking for this price to stay in this is what they call the body of the butterfly, is to stay in between this range. This is the T line. So each day passes, right? It will elevate. It's a passage of time. So this line is right here. Next day will go here, and then it will go here, and it will reach to the Friday expiration, and that's it. It will, that will be end. So when you're placing a trade on a butterfly, your T line right there will be somewhere around like this curve. Depends on the time that you're buying. So each day is gonna be the T line will be moving up like this all the way until Friday, then it will disappear. But in that meantime, you just want the price to stay in between in this zone. Longer it stays here, bigger the payout is. If the price managed to come and close this at 295, that's what you're going to hit a jackpot. But we don't know where the price is going to close. You see what happens yesterday? Price pushed up higher, made a full reversal back. So meaning that you literally went negative by basically everything going up in the money, right? Because all three strikes are in the money now. And then all of a sudden, when you got that push back down toward the center, the 8 long calls, 8 of those that you were long 397.5 are the ones that got hurt really bad. That premium that melted from those calls was this, because you were long 8 of those. I just closed it. So I don't really like to fight butterflies in a very last day. Okay, just keep that thing in mind because it's very dangerous. Okay, butterflies are considered as they call income fly. You can generate a really good income from those. People do covered calls and stuff all the time. There's a lot of people that do butterfly. I don't think too many people trade butterflies, to be honest. It is the most cheapest strategy in the option market is the butterfly. Compared to iron condor, calendars, diagonals, spreads, anything you want to do. It's the least amount of capital that you can invest, okay, per trade is the butterfly. And it has a massive reward. But the reward is if the price managed to close in between those wings. It can come down. You'll be all super excited. I got 4 more hours to go until expiration. I hope the price can stay here. 2 hours later, they'll rip right back outside. All the money that you were really close by making, you just give everything back. So you don't know that where the price is going to close. We have a high of a bar. We have a low. We have an open. We don't know where the close is. We can have a close all the way up here. We can have a close here. We can close anywhere. We just have to wait for that close. That close right there is the payout. That close right there is the signals that fires every single day for all of us. The close. Open is fine. High is good. Low is good. I need a close. That's when the candle will fully formed with the high, with the low, with the high, with the open and a close. Complete candle. Then you make a next move based on 1 or 2, 3 previous candles that you have appeared here. That's the concept. It's very simple trading, to be honest. I think people who not really into Elliott wave, I think this stuff is going to help you a lot more, to be honest, to trade. You know? It's all swing trading. That's all it is. High, lows, and we have targets, and we have our moving averages, and let the system do the work. What else do you want? You just follow a simple screen. Define risk, take a shot. Now, if you are an opinion-based trader thinking like, well, I have a different opinion about this. I don't think so. This thing is going to play out. If you have those doubts in your head, well, then you're not even sure what you're even doing. And don't judge. I don't like that. You don't know. Neither do I. Why judging? What is the reason for it? This negativity people have in their head, I understand, is like it's emotional game. Is like you have a buy signal right on your face, okay, on a good company stock. Why are you hesitating to take a shot? What's the reason for it? What, because you don't like the stock, you don't trust the system, you believe that the system just gonna fail, I'm gonna lose money. You have those doubts. If you have the fear, that's not good. You have to work on it. So you trading, what are you doing? You are planning to risk. How much you want to risk, that's the decisions you have to make. How much I can be comfortably losing if the signal will fail, or a swing can fail. It's the same thing, but you don't see those. It's all behind the screen. If a swing fails, so position didn't play out, what do you think is going to happen? If our odds are better, if our average more wins than the losses, keep swinging. I'm going to give you a lot more of these. A lot more of these. It doesn't mean that I'm going to trade 30 pairs a month. Don't expect, I I cherry pick some of these picks. I want to make sure, they're going side by side on two different screens. Then I had like, okay, now it's worth taking a shot. I don't just randomly act like running like 10, 15 option positions all at once. You know how much risk is that? And how difficult it is to manage that many positions all at once? Less is more, I'm going to keep them that way. If you look at Caterpillar, look at this. Well, nobody in the world knows that industrial sector is gonna kick ass this year. And this is the kitty cat is the one who's gonna go wild. Look right there. Look how close you got toward this low. If you would have panicked, you thought like, I don't know, you got yourself in here. You take a 4 days of straight beating. You're thinking like, that's fine. I'm just gonna cut it off. Look, don't judge. Never doubt yourself. Let the trade work. Nothing's gonna happen. Worst case is gonna stop us out. So what's gonna happen? Meaning that sell signal, which is sitting right up here on the top, is still valid. That it means that the stock will never gonna get a buy. Of course it will. You just have to wait for it. And find the other ones that has the buy on it. Act on those. That's the whole game that we're gonna play. As simple as it can get. These are all targets that we're chasing. This is going since 411. That daily bar right there fired that signal at 411, and it's been going ever since. Next one is going to be a sell. 100% going to be. Well, when is going to be? Well, we're going to find out. But the price is trailing above the green band and above the ATR, meaning that it's keeping this ATR. McDonald's, we already looked. I'm just going through the Dow 30 stocks here. Here's EXP. Okay. Now EXP right there, American Express, triggered a buy signal, which is a mean reversion signal. Okay. Now what is this? Why is not green? Why is pink? Well, this is because there's a different conditions on it. The conditions on these one is a zigzag pattern. A zigzag pattern from the high. It take a high of the swing, runs a zigzag, and it has a bunch of fibs sitting over here. So once that fib reaches based on a higher bar, it triggers a mean reversion signal. So now that signal right there, as you can see, it's sell signal triggered here against this stops 328. I'm gonna remove this one. Now because it converted into a buy now. So now it came back down from 7.8 on the 7.8 daily bar. It triggered a sell signal, went up. Next day, water went right back up, but it was very darn close, as you can see. Look at this red line, which is the high of the previous day bar. So price came back here, and then from there, it's starting to back off. The point is that the price must stay below the high of this day, which is 7.7 high of the daily bar. And then from there, the price started to back off. Now the price came all the way back down, tested the 50 EMA. Tested here, bounce, second day, closed right at that 50. Then the next day, poked a little bit down, closed another at 50, and then it got a pop right there, another day, and another day. So now is green at 50, above 50, above 200. Day was up, month is up, the overall week was down. Yesterday was 5.14 expected move. The made a move. ATI was at 618. It was like 83% was the total expected move was done yesterday. So now in this case right there, I do take those, but I don't take a lot of those, trust me. Okay. Now in this case, now you probably wonder like why it doesn't have the yellow, sorry, the one of these red lines and the green ones like this, right? It doesn't have that because it's a zigzag pattern in the accumulation phase in the market. You just have to take the very low of that's going to be your stop loss. Because if the price from here turns back down, this buy signal is no longer valid. It's gonna this sell signal will continues from the very top. Okay, because this is a fib entry, this is exactly what you're taking. Some of them plays out really good. Okay, those are based on a zigzag pattern. That's all it is on one single chart. I don't care what happens back here. Would you sit in and what? Who cares? What happens here? Focus on this part. Here's Visa. Now, at the same, you have to understand. You see how close these are. Buy here, sell here, buy here. I ignore these. Okay, I ignore these. Why? Because they're fighting too close and too bad against each other. Not enough room for the trade to actually move. Well, it triggered here on a very big, huge sell-off, right? Which it didn't trigger on that particular day. It actually triggered on this bar right there the next day. So it shows up here against this high. So you have to watch some of these trades as well, because some of them is going to have a pretty wide, huge stop loss as well, because the high right there for the previous day was way up there, right? So imagine now we're going to get ourselves into this trade somewhere around here, but you're risking all the way up till here. That's huge. The price can go like this. It just, as long as it stays, it just, the point is, it's pretty wide. I like to keep them close as possible. So that's why these buy signals are very good. Now, there is going to be some signals that you're going to see that the price came back to this line right there. The day that is going, it came back down like this. But the same day, meaning that it put a pin like this. See, they call the pin, right? This one. But it closes above here. It happens. You're going to see some come across like this, meaning it gives you the pin bar to stop you out, but then it just rips right back up to end the day. And then the next day you come in, you have another higher bar. And then you say like, wait a second, it kicked me out yesterday because I triggered my stops here on the pin bar, but the buy signal is still valid because the signal is based on the close, not based on the high and low. Okay, so you have to be careful. You have to understand that it's only based on a close. There will be few, not a lot, but you will kind of come across to see like you gotta get your ass kicked on a pin that if you're long shares or whatever the case is, now you get out, took a loss, but the close is above the low of the previous day bar, or 2 or 3 days low, whatever the low was. See, these are pin bars. You see how huge this pin? Look at the size of the body, so tiny. Now this is a juicy one. See how huge the body of this is. A strong candle, lot of volume. See the volume right there. It confirms you everything. A lot more buyers stepping in compared to a seller. Look at this. Massive spike in selling. It's price confirmation with volume. Volume is very important. Volume comes first, then price. It's not other way around. This is where all the buyers and sellers are sitting. That you can see, well, nobody knows who's doing what, but you can see the pressure. Microsoft still going. Same thing. See? Look at this. I bet you there's millions of people came that close. Like, you know what? Screw it. I'm out. That tiny, less than 1 point would have rewarded you this much. It's all about staying disciplined. Stick to the rule. Do not touch or move the trade until the stop triggers. That's it. This is a disaster, man. Home Depot. Very choppy sideways, as you can see. You know, you have to study the chart as well. You can't just simply look at, like, oh, I just want to go in. You have to look when was the last one triggered, where was the sell was, too close. Yeah, gotta ignore them. I mean, now it's picking up, as you can see. Now it's above the 5,200. Now you can see the band is trying to turn green as well. It's trying to make its way out as a higher monthly bar. So Home Depot might get up to this 383. So, I mean, should I enter a trade here? Okay, I can. Now to target 383. Okay, we can do that. Now, where are we gonna set like a stop or something? Here, because it's closed above the 200 yesterday, especially from the last 2 days, 3 days, I would say. This close, and this is a third day for Home Depot to close above the 200. Well, this is what I'm saying. Is like you had a market right there and Dow 30 rip into the upside, sitting near all-time high. These stocks are dying to close above the 200. Think for that second. Like, these are huge companies. They're like struggling. And where we have Dow, S&P, market is like, I don't know. I know it's a little confusing, it's a little frustrated when, some people are not happy seeing this much upside that quick. Some who wants to get in, afraid, scared to get in because market is at all-time high because it's due for some sort of a pullback. That pullback, especially the option, is going to get hurt really bad, right? Because of the spike and the premiums and IV and stuff. So there's always a fear. Everybody is going to have these doubts. Are we at the high end? There's 1,000 guys right there on exit day and night giving people hope. Oh, this is the top. This is a channel resistance. This is it. Everybody's firing left and right. Just throw it out there, see who's going to get lucky. It's just like these opinions and judgments, and it's all noise. You have to ask yourself, like, how you want to trade, how you want to define your risk per trade. That's it. Just let the thing work. I'm not guaranteed anyone that these signals are 100% perfect or this and this. I know this thing for a fact. Okay, from the last 3 years, I can even show you my account statement from last year. I made 300 grand last year trading this. You can do it as well. Okay, you just have to define your risk. Don't move the trade until the stop triggers. Let the trade work. And we're just going to keep swinging them. No charting, no labeling, no swings, nothing. So one simple screen. This is all I want to trade. I don't need anything else. I don't need a wave count anymore. You have time, you want to learn, sit down and learn. I don't need to learn Elliott wave. I learned enough in my trading career that I just turn everything like this. And this is what I want. This is what I'm going to trade. You're going to ride with me? Come on board. You want to choose a different path? I wish you nothing but a good luck. Okay? You don't worry about me at all. 3M took a massive reversal after earnings. Look at that high. That's what you call more classic fibs. Look at the print. 164.15 against 164.17. Look at that massive, nasty reversal bar. Because see the previous day high and low? Look at the high and the low, same day. Yeah, that's earnings. Flushing everyone out, both sides. Heavy. So I just, nothing there. Boeing, you see that's going from the mean reversion signal. You see on this mean reversion signal, we just talked about it. That's the stop loss right there on that day. And then you just, what you're looking for here, that is a zigzag pattern, picks up an entry on a fib. You need to target this high because you're looking for what? A higher high for swing to turn back up to 218. So it's the same trade. I took a service. I think we traded a service now. Yeah, that was a mean reversion that we played. So this one right there, what you're looking for is same. Set a stop loss right there. That's your target right there. Is what you're looking for is for the swing to turn back up to take out the 218, the previous high. And then the trade goes. So it stays. Next one is going to be a sell. I don't know when, but that's what it is. As the mean reversion goes. You see the low is not, that low must hold. CRM already looked. Walmart triggered a buy signal here, as you can see. Now Walmart, you always have to look at the overall structure as well. You see how close 97, 95, 99, 95. It's in a very kind of tight range. Okay, the stock is in, but it's starting to look a little bit promising. It is above the 50 and 200. It's a very low, slow boomer. Okay. But it fired on the 721 but it's fired on the 722. Okay. It's not that far. You had 97 against 94. But it just now it has to look for a breakout. Now Walmart is trading inside, have an inside monthly bar. So meaning that it's been choppy, it's been sideways for the whole month. Okay. So you know me that I don't really fight inside days. I like to trade either going up or I will take a swing if I want to do hedging and stuff to play the downside. I'd like to trade in the direction. I don't want to kill myself over an inside range when nothing is breaking out either to the top side or to the downside. Nike is still going right before the earnings right there. We took a lotto here. That's the signal that I took on lotto on Nike. That was a nice lotto. Paid really good at the open. You see 200, got the pop, came back, retest 200. Now it's making a way back up. So it's kind of like whipsaws. You see what happens? Got a breakout, came back down. Now go back. We're just, but it's trying to make his way up. From here, it got hit with a sell here a little bit, and then it picks up into a buy. But that happens though before earnings. That was earning day right there. So this triggered on the 24th. So that was a good lotto. Merck. There you go. Here's an example. Now this sell signal on Merck got invalidated yesterday. Even the fact that it was a pin bar right there. You see, it didn't give you the confirmation right there. As you can see, the close was below this line, right? But yesterday bar cleared this one and closed above it. Now this one on Monday at the open will disappear because this is when you have the official close above this high, which was 84.34. So Monday I'm going to log in as soon as the bell is going to ring when the new bar is going to open. So that thing will disappear. That will take you back to this one again, meaning that sell signal, but this was a full sell signal after this one, right? This no longer valid. This remains intact. That means that the buy signal still continues. So then you just have to wait for the next sell signal whenever it's gonna, it's gonna come next time. So sometime I keep a record, like write some stocks on a notepad. So when the next one is gonna trigger the sell, I know that the last time it failed, right? So if I have I'm gonna remember all this, but I mean I can, but like it's easier. I just write them down on a notepad right next to me, and then I will know I have a list of stocks that which one failed, which one's still on a buy. When the next sell will trigger, I'll take a shot on those ones for sure. Because once it fails, the second one sell is not. No, it's just be a good one. So we'll see. Cisco picked it back up a little bit. A little choppy. You have to understand the same thing as well. You see a lot. This is a massive run. Don't expect like something triggers here, you just gonna come down like this. That doesn't happen like that, like Dow 30 stocks. Like if you're looking at big stock, yeah, some smaller company, yeah, can take a serious hit. But you don't instantly give back this kind of a massive months and months of upside when you know that first you're clearly trading above the green band. You're above the 50, you're above the 200. Look where these 50 and 200, where the sell signal triggered. You think like, okay, well, can I come at least test the 50? That's what I would set my target, just to come and hug this one first. I mean, if the stock got a big surprise on earnings and stuff, that's a totally different picture, right? Because the earning risks can literally destroy the stock on any kind of a surprise. But on a regular trading days and stuff, without any kind of a news, whatever, card stock will give back, but it's just not gonna give back in such a very fast pace, because these lines like the averages, VWAPs and stuff, they get respected on the way up. The VWAP is a 68, 62 right there. It's the same thing right there. You have a VWAP running in the back as well. That gives you the print right there on the bottom. So when the price goes below the VWAP, it's going to turn green. Sorry, red. If it stays above, it stays green. So you got Apple. Oh, come on. We know we looked at the wave curve. So Apple right now is fighting this 200 now. Is above the 50 and 200 now. Look at the pin bar. Didn't close. Look at this. This was a false close that Apple got on the 722. Okay, from the low. Since from here. No, from here. 311. Price came back around. He saw how many times it tested here, failed. And then it finally made its way here, failed. You see, big, huge pin, closes right there. Same thing right there. Massive pin, right? Okay. And for yesterday finally closed here. That's Apple. We're talking about $3.5 trillion company fighting her life on this 200 right now. So it's just fixed market. That's all I can say. Coke is kind of. This one triggered a buy signal right there. Sherwin-Williams. I need to look and see what their earnings are. Stops are pretty wide on this, all the way down here. And they have earnings coming up as well. Option chain is not as liquid either. That's another problem. I don't know how many this what I like about this is this. Okay. It has a very nice inverted head and shoulder pattern. Okay. If it's gonna go, it's gonna go. If it fails, it fails. So the probability on this trade is that it has a great setup, okay, of an inverse head and shoulder. There's your neckline right up there on the top. It has a buy signal against the stops, but you're gonna have to fight. But you have to fight the illiquid option chain. That's the only the hurdle that you have. I mean, if you really gonna press something, if it's at what 340, I mean 340, this is below the 50 and 200. So first, you're gonna have to buy yourself some time. I mean, it's given hopes. It failed. I mean, stock moves just, but it chops around too much. Okay, I mean, this is you looking at weeks and weeks of chop side by side. So you have to learn how to study a chart as well. Okay, what I'm looking at. So the point is this, okay? I don't want you or anyone here to be act desperate. I want to buy this, I want to take this, I want to take this. Okay, that's just I can take 50 of them if I want to. I don't want to. Okay, I'll be selective. Study a chart to see what looks good. I'm not judging anything. I'm just trying to study a chart. If the price is not really looking that great based on the previous buy sell, I'm not dying to trade this one, which is at least cost $340, $40 stock. Premium is not going to be cheap either. On top of it, I'm going to fight illiquid option chain. You know, that's like when you like it at the same time, like, okay, that's fine. You know, so it's just like, I'm not really excited about it. Let's put it this way, you know? So if you're saying things like, well, I believe that this might plays out, pattern looks good, you might get a nice breakout, you know, that's probably gonna happen on earnings. Yeah, then you just take a shot. But just try to trade with me. That's all I can tell you. Okay, I put my own money on a line. I know when the trade is moving, what's happening. I'll manage it. If I have to cut it book half profit, which I'll manage it that way. I know I have two accounts running on the same position. But if you just say like, well, I like this stock, and you check and see, like you just like jumping from one, like how many positions you want to run all at once? You know, it becomes really difficult. If you focus on quality, good companies, I think your odds of making money and for signal to be playing out in the favor overall has a very good probability. Look at this. Look at the low of this bar against this low. Tell me that these signals are BS. Can't even type the print in there. Look at this gap. 95.04 was the low of this bar, and 94.46 was the low of this bar. Didn't get stopped out. And look what NVIDIA is right now. Ever since. These ones gonna test your nerves, so you have to be ready for it.
Mo,
This-
do these bars include extended hours price action?
No. No. Bell to bell. Open, close, high, close. Sorry, open, close, high, and low. That's how these bars are set for. Every action of a trigger will based on a close. That's the way I set it up that way. Now these ones here, okay, are the ones that gives you these ones. You see like how it triggers buys and sells. Now these signals here are different. Okay, these are the ones I have on Optima. Now these ones gives you on the close as well, but these ones can literally pick bottoms and tops. Okay, but then because they're different scripts that I have. So like, let me show you an example on MSTR. Now look at this one. Okay. Now MSTR on July 16, 2025 on Wednesday, right? The candle closed, the sell signal triggered right on that day. Okay. Then the next day, it was an inside bar. Okay. Signal is valid. Okay. Now in this signal right there, your risk is very tight. Okay. You only risk in this high. Because of the next day, if the price managed to clear and make another high, the signal is no longer valid. Okay. So it's a very tight risk play. It's very tight. But now the sell triggered here on 416. The sell triggered here on. So what I'm looking at. Oh, I'm looking at a weekly bar. Sorry. No, hang on. Why my dates are July 16. Okay, right. Okay. This is a July 16 right there on the bottom, right here. So that's a July 16. So the sell signal you see on the Optima fired here. Okay. On this day. Look how many days it took. 1, 2, 3. After 3 days, this one triggered. So there's a lot of time I can pick an early entry on a stock from the other side. So keep that thing in mind as well. Okay, so I don't just simply rely on one single screen. I can if I wanted to. The reason why is because this one I left a little bit of a buffer zone for this thing to define risk, where I wanted to get in and where I want to get out. Okay. The other ones are more faster because of the swings. Okay. So, but those ones will give you faster tops and quicker bottoms. These ones, okay, gives you 3 days of bottom because the signal triggered on this day for the previous day bar against this low, right? So then from here, price went up, came back down, and then finally made its way back up. But this is a trade that we took, that's MSTR, right? Against this low. It's always gonna be, you have to understand this. The price can push up. You can just flush it everything back down for the next day or two. It happens because why? We're trading below this red band and price is gonna fight its way up. You don't just instantly rip like this. Any downside will take some time to work its way up. Okay. Especially like, like it depends where you are, especially like if you below 50 and 200, you have a buy signal here. This is why I said 60 days. You have to buy time because the price is under pressure for a long period of time. So it will take time to go back up. It's not going to be an instant move that many hope for. Because you have to look at the duration of a time, that how long, how many weeks the price has been under pressure below these two moving averages. It's giving you that entry that you can possibly pick a pretty cute bottom, and then from there it can definitely it can play out for you and you can work your way up. But again, that's swing trades. If I pick something here, I get myself here into a first zone. This is the first zone right there. So they have multiple zones here, 2, 3, and 4. So I have built these zones right there. That's going to be my targets. Well, how fast we're going to go there, I don't know that. If I get myself here and if I'm going to try to get into a first zone right there, I'm going to start booking profits. Fine, I have a sell buy signal here, but I'm going to book something. Because some of these fibs are pretty strong. They can just kind of give you almost the penny print and it's starting to back off. Not going to blindly trade like, oh yeah, I fully trusted this. I'm going to risk my entire life over it. No, I mean, I'm going to get to my first zone. I'm going to book something. If the momentum is strong and if the price looks good, Bitcoin is rallying, everything else looks good. Yes, if it has that, RRG looks really good, I will see like, okay, I can get to a phase, zone 2. So I have the targets against what I'm risking. How simple is that? I mean, what else do you want? But no, you want me to sit and label, oh, this is 1. Oh, no, we're working on wave 2 right now because this is 1. Oh, no, we're going to change our mind. We're going to go as a 1, 2, 3, 4. So we're going to, see, this is what we do in a smaller time frame. Oh, there you go. Story over. The dip, now this fourth wave right there, dip below the prior wave 1 high. That's it. It's no longer valid. What do we do now? Okay, we're going to go 1, 2. If I can do all this here, why do I need to label it? I don't understand. I know for you is different, but for me it's not. I can look at a blank chart. I can count waves in my head. I don't need to label anything. I don't get me wrong. It's not like I hate Elliott. Elliott is always going to be my baby. But I want to move to this. Well, I've been moving to this. So I brought this one up this month for you all to fully understand how to read a chart. What is the logic behind this? And then from August 1st, this is what you're going to be seeing everywhere. You're going to be showing those white charts, and I'll do some promote for just for a Twitter and stuff. I'll post them. But other than that, easy work. Open up a trade. I'm just become a lazy trader now. I have a beautiful couch next to me. I take my power naps. TV right there, huge 155-inch. Sit, watch TV, take a power nap for half an hour or so. Let the trade work. That's
So
how
Mo,
that's how I trade.
about the MSTR, um, as we know that Michael Saylor issued he's issuing $2 billion STRC stock to buy more Bitcoins. And it looks like MSTR stock is behaving the same way like it did when Michael Saylor did the offering of convertible notes back in November,
Yeah.
when the stock price hit all-time high. So it has already went down two levels down from after the sell signal fired.
Yeah.
Um, I have lots of shares of
Course you do.
MicroStrategy, so I wonder what to do. If it goes down sharp like it did while the Bitcoin was, rallying hard after the post-election, there is a risk that the MSTR is going to, divert from whatever Bitcoin is doing. So how do I protect my largest position, my equity portfolio, which is MSTR?
Okay, here's the thing about now if we go back to a weekly time frame, it has a buy signal at 300, right? That was a mean reversion signal. So price right now is at 400 from the 300 ever since. So this one fired on 414 from this low. So from 414 last year, no, is it this year? It doesn't give you a year. December, no, yeah, this year, yeah, because the year ends here. Yeah, this is 25th. So this one was 414. So the weekly time frame is good. Okay. It doesn't mean they cannot change. Of course it can if the price is going to get under pressure. But the daily time frame, you see, so from 414, I got to go all the way back there now. So because we're right there in 7, look how many buy and sell has triggered on a daily versus you just only still has the buy over there on a weekly. You see my point? Shorter and shorter the time frame is going to get, more and more signals you're going to get. Shorter and shorter the time frame gets, more money is going to cost you. Your probability of being wrong increases significantly much higher if you sit and fight 15, 30 minutes, 1 hour charts. Swing trading takes time. Is gonna give you plenty of time for trade to breathe. So the weekly thing, you see, 32 to 361. They're gonna last a very long time. Okay. So those weekly signals, what I'm talking about, they're gonna be one for the very long dated leaps if you want to try those, or you just simply buy shares. So these signals triggers based on a weekly bar, not on a daily bar. But the same thing here, same concept. The week 8-7 closes the week. The previous week high is the stop loss. The week closes here, a massive, huge day. Next week started on Monday, signal fired here against this low. Yeah, but that time when you look at them from 22, from 22 down to 13, 14. So you're risking 7, 8 points And then from here, the next one triggered had 39. But these are weekly bars. You see how it goes back and forth, back and forth. These are very long, the long time horizon. These are the ones you don't literally sit and watch and babysit candles every single day. These are the ones you just literally look at your portfolio once a week on Friday. That's it. So we're gonna start those for people who's gonna buy shares. I'm gonna give you the same trades based on those. I take them as well because I run a pretty large portfolio. And then those are the ones you just let them breathe based on a weekly time frame. Higher the time frame is, a lot more money you're gonna make. I'll tell you that. But if you're just gonna sit and babysit every candles on a daily bar, oh, market sold off 30 points today. Well, okay, but worry about what you have open. Market will do what it has to do, but whatever you have your risk, if your signal is valid, you stay in a trade.
So, well, maybe MicroStrategy is a stock which is a good candidate for doing the color.
But you have to look at this way. Said, okay, fine. Weekly has a buy signal, right? Now this one has a sell signal. Sell signal triggered here as well. Now stock is trading above a 50. It is trading above, which is 50 is at where? 397, near the 400. Trading above the 200. 200 set all the way down here at 327. And if you, unless you really think that it's going to come down that heavy, okay, well, that's a different debate. But in the same time, I think that is going to try to find some sort of a support here, okay, to see you can give a bit of a bounce to see what kind of an upside it can get. Okay, but I'm not going to buy anything until I have this. So don't expect me to open any trade on a stock if it says sell on it. I am not a buyer. My screen is not telling me to buy yet. I'll wait. That doesn't mean that there's not going to be another buy ever. Of course it will. The weekly is still under a buy, so the buy signal will appear quick. This is 392. Look, I mean, you cannot really make anything. And then fired another one at 371. We played this one because I was like looking at this trade. I was like, okay, well, I don't need that box. Jeez, what's going on? I looked at this. Like this. I was like, okay, let's go. That was what I was like. Price is squeezing here. I was like, this thing is gonna pop. I mean, it played out well. So, I mean, we got definitely. I remember this day. That was up here. I gave everything back here. I was like, what the hell? Right there. I remember this sell-off right there. It was a pretty heavy one. Nasty bar. I was like, okay, well, we're okay. We'll see how the next day comes and where we open to look at the reversal the next day. Yeah, don't judge over or panic over a one single session. Anything can happen the next day or two. Okay, just hold the ground.
So I feel like, I missed the chance to reduce the size of my position of MSTR shares.
I'm gonna
Because
show
it's
you.
already,
Okay.
and then, it is possible that it could go all the way down to 358.28, which is a previous wave 4. So, but
Well, these
I
are our
don't want,
targets.
I don't
Anything.
want to see, I don't want to just wait,
Well, you don't
just
know that it's gonna come down. So that's your
yeah,
judgment.
yeah. So what is the portfolio protection you can recommend on
396, 396. If the 50 is starting to break, okay, meaning if the bar is starting to open and close below the 50, and if the bar right there turns red, okay, then there is a potential path down to 369, 370 mark. But the price has to close below the 50 to actually break the 50. Okay. So these are your downside numbers. And if the price gets super heavy, then you look for 370, then you look for 358, then you look for 345, then you look for 328. That's what your 200 moving average. So these are all your downside targets. Same thing you have an upside target. Look at the target right there. Hit them, failed. Another pin bar, failed. Promising bar at the right there at the fib. Next day, inside day. This 4 days, okay, even the fact it tried here as well before the flush out, this 4 days right there was a hell for that stock that I've been watching. I said, like, this stock is just hesitating really, really bad to break this. Because once you have two like this, one day, right, you have a high here. Next day you have a high, but then you flush it back down. Now you have a double top. Okay. Now you have a double top. You're thinking like, okay, well, let's see what happens the next day. Next day comes a triple top. You're waiting for this double top to break, right? Signal is in, and you're looking for this breakout. Not happening. Day closes. Now you have a triple top. Now you go up to a quadruple top. I mean, come on. It just put like this 455 fib just was a very tough nut to crack. That took a sharp dive lower, which was on 718 sell-off, 721, that was on Friday. And then on 721, which is Monday, which is the 5 bars, 1, 2, 3, 4, 5. So Monday, Tuesday, Wednesday, Thursday, Friday. So for 5 days, which basically for this month, sorry, for this week, it's been making lows, lower lows every single day, lower bars, lower bar, inside day, lower bar. It even had a single higher bar all week. So yeah, the price is definitely under pressure because of the sell signal now. So this is what I said. You don't act or try to pick yourself any entries and stuff until you have this. Because this one right there will define your risk. You don't have any risk. Where you gonna like, okay, I want to enter the trade here. Where are you gonna put your stops? Like, where you gonna say like what I'm trying to protect to the downside? Nothing. It's blank. At least here, you know exactly where you're gonna be wrong. You have to look at that way as well. This is an excellent way to manage risk. I don't think there's any other strategy. You want to go super tight way, we can go this route as well. You're just risking one single bar. Here, I leave a little buffer zone for this for price to breathe. They look beautiful on a screen, right? You say like, oh man, I wish I would have held this thing. I was like, I would have made crazy stupid money. It's just, well, you can hold it, but it's not gonna be full straight line. This is like weeks of runs as well on these stocks. Here's a
Well, can
way
you
to, if you have a stock, I'm gonna show you a hedge strategy. And then we're gonna get off signals. We can always chase them around. Let's do
well,
it.
can you go back to November MicroStrategy? I want to see how many down days it had
Which one?
before it bounced back. MicroStrategy November 2024.
This screen?
No, not that one. Yeah, this one. Can you zoom out?
Sam, okay, give me the date again.
November 2024. Can you zoom out to see the downfall from the November peak last year? Yeah. That's it. So it chopped down to downside until that one,
12/31.
December. So about a month,
That was the end of the year,
right?
New Year's Eve. Then I got a bit of a bounce, reversed up, just choppy, very, very choppy. But because And then from there, look, all the way came back 200 here. Then, so it managed to break. Look how price fights at 200, man. I'm telling you, to the downside and to the upside, a strong stocks. Yeah, they're gonna fight for their life, for their life at 200 though. Always watch this one. You're gonna get a really kind of like a false break one day. Think like, oh, now we close below the 200. I always wait for the next day, to be honest, because a lot of time I've seen, you see, next day you get a huge pop right back up. The close is right there. Yeah, you just like, okay, well, now you actually just basically what you're looking for, the real good confirmation. You want to see a full body open and close below this line, not these wicks. You know, you have to pay attention. You see, all the closes are all above the 200, not lower. You're coming, testing, bouncing, but you see all the closes are all the way up. It just it just scares all these buyers. You know, even the fact that you see even the volume kicking up as well, showing like a massive downside pressure. But these wicks right there, but the price, you know, as I said, some of these stocks don't instantly break 200. You always have to watch for it. I'm going to show you a one hedging strategy. Okay, you might have a stock that you're sitting and you're right. I'm doing this car. Let's say, for an example, you own a stock. It's called Hood. Okay, I don't know what it is, but some people are crazy about this stock. So let's say you own a position that you opened a year ago, 2 years ago, 3 years ago, whatever. Okay. The stock right now trading at 104.85. So we're gonna analyze and stimulate a trade. Okay. Let's say you own 300 shares on a stock of Hood that you paid like roughly like $40. Okay, a long time ago. So if we analyze this trade, okay, as of yesterday, so those 300 shares that you purchased at 40, okay, so it costs you roughly probably like 12 grand or so. They're up like $19,500. Okay, those 300 shares. You have 300 long deltas. Okay. And close this. Delete this slide. Okay, so you long 300 deltas that you bottom back in 40s, and now it's worth 19,560 bucks. So there's no time decay, there's no gamma, there's no volatility. You simply own shares. Now, let's say the earnings are coming up, or you come across and see like, well, I just noticed that the Hood just got hit with a sell signal, as you can see right here. It had a buy signal here, but this 37.78 against this low. Ever since it rolled all the way back up, and then it got a sell signal here, which is on a 722 against the 110. Meaning if the price is going to reverse, takes out this low, this sell signal is no longer valid. But you sit in thinking like, well, I'm up quite a bit. Should I close? Should I sell half my size position? What I do? Well, you have an option to book profits. That doesn't mean that once you do that, you're out of the position. Second, you can book some partials. They're like, okay, I want to sell 50 shares. I want to sell 75 shares. I want to sell 100 shares. You can do that as well, right? So you can light up the position, book some profits. You can always do that. Nobody has ever go broke taking profits. Nothing is going to go up forever. You know that, and I know that as well. Okay. The price is going to have accumulation phase for extended period of time. Sooner or later, the stock is going to take a pause. It can start to go sideways for a very long time. It can happen. So now the stocks right there now are in earnings season, right? So you have some big holdings. You're going to have to face earning risk, right? Anything can happen. You don't know that how the stock is going to react, how they report this and that, and how the stock will react, how it will trade. Well, we have no idea. Nobody knows that. Okay. The earnings are pure gambling. There is no signal, there's no wave count, there's no Gann swing, there's no indicator, there's no such a thing exist in the world will tell you which direction the stock will swing. It's a simple, pure gambling. You're either gonna hit something or you're just gonna go to zero. You have to be well aware of that risk into an earning. If you're comfortable playing a lotto for 150, 200 bucks, roll the dice. If you think like, hey, you know what, I'm not dying to trade lottos, stay back, focus on swing trades. It's not for you. You don't want to take it, don't take it. You know? So the ones that get hit, like, oh, okay, fine. But the ones that plays out, oh, I didn't trade that one because I was busy. I couldn't take that trade. So you see, like if you kind of go through that kind of phase, like, well, you're missing out on a one that actually popped quite a bit, but then you end up taking a losing one. So if you're just gonna move and dance around those, well, that becomes a little tricky. I'm not a guy who fires 25, 30 trades a month that I trade so heavy that you really cannot even get, cash the trade. I trade very selective pairs. There's few days I don't even trade anything. Just want to sit back, watch the market, analyze it. So try to capture it. I mean, try to take it as quick as you can. If I'm in, you in. My money's on the line. It's not like I'm bored just sitting and throwing trades left and right. Anyhow, back to this. So what's the plan? The plan right now is 110. So we have a ceiling right there, 110. Now we know the price is above the 50, above the 200, right? Stock is bullish, trading above the green band. It tested this blue zone 112, high is 113.44, and backed off down to this pink line at 102. Now the price has been sitting here. It got surprised here with a sell signal. So how do you protect your upside? Okay. Sorry, your downside, not upside, downside by doing a hedge. Okay. So if you have something like this deep in the money, what you can do is that you can sell a call credit spread. Okay, now it has a sell signal here. What you can do is that you take 112 and 122 to see how it looks. So 112, 122. Let me keep this thing on the side here. I can open this one here. So now we'll look for the option chain. Go right there to Friday expiration. Now we look for a credit. We don't want to go because signal will fail at 110. So we want to do 112 is here at $2.30 premium. And then you have 123. You don't want to extend that much out. 133 at 63.64. Implied move is 10 bucks from 104.85. So you take 104.85 plus 110.29 is 115. Okay. So if the price takes a 1 standard deviation move down up to this 115 mark, that means that the signal will fail. That's on the plus side. Now, if the price comes down 10 points from 104.85 minus 10.27, puts you at 94. Okay. So now you have a zone which is 94, which is right there to the green line, right? So what are we? So what we can do? So we have our downside risk of a 1 standard deviation move down to 94, and we have an upside is at 115. So 115 to the upside will invalidate the sell signal, And if the price rolls over, it means the sell signal is active because the price didn't break above the 110 high. So how do we sell a credit spread? So let's see what the premium looks like. So you take the 112, not the buy, you hit sell. Okay. So you sell the 112, and let's see, you get down to 123. We don't want to go to 123 because we don't have that expected massive move. We don't want to open up that much. It's going to give you more credit, but it's going to give you bigger risk. So now you hold control on your keyboard. You select them with, let's see what 120. So you had 112, 120, buy this. So you will receive a credit of 140. Okay. So now your upside is capped at 110, 120. So you short 112 calls, you long 120. It's called a call credit. This is what you call a credit spread. Okay, it doesn't have credit, so it's a call because you're selling here, not here. So that's $1.40. You will instantly get paid up front. Now you just have to wait for the passage of time until the Friday to make sure the price stays below the 120. The price goes above the 120, that's when you're going to get hurt. But in that case, we're going to use a stop loss, right? So let's say you want to receive, so that's 112, 120. I wouldn't even go 120. 104 plus 10, that's 114. Let's see. See if I'm going to cut it down here, it's going to reduce the credit because I'm making a shorter. 118. So the 118, 112. Let's do this. Let's do it at 120 for now. It gives you $1.40. Let's make $1 on. There you go. So we'll do 112, 117, receive $100 up front, $103, depends when you get filled. Now you are long 300 shares. So now we need to go up to $300 worth of a credit here as well. But that is for 1 point moves. You either make 300 or you're going to lose 300, right? On shares. So in this case right there, well, you have to, depends how much you want to bump it up. So, I mean, I'm just doing 10 for now. Let's analyze this thing. So here's your picture is going to look like. Take the shares off. This is your credit spread. What you're looking right now is you negative 116 deltas, but you positive $80 per day. So $80 is what you're going to make every single day just to hold this credit spread. Okay. So now in this case right there, we're putting a ceiling here at 113. 113, why is 112, and the credit that you receive is going to be your top upside, where is your upside is going to be capped at. You don't want to have the price to go above 113 because you're going to start losing money. Okay. You want to make, well, you don't want to make, you hope the market managed to stay below the 113, stays anywhere here until Friday, and you get to keep $1,030. This is the credit that you received, and that's the credit that you will get paid on by Friday. Okay. Now in this case, so you risk in 116, but your invalidation here is at 110. Now the earning risk is wild because you don't know which way the stock is going to swing. So a regular hedging, okay, that's what you do is just like you're going to risk $110 right there to the stop loss. So you set up alert here at 110. If this credit spread what you're holding, but keep in mind that you are losing money by going up on the credit spread, but you're making money on the 300 shares that you're holding because you already have a long exposure. Okay. But there you are, if you have simply a credit spread, the credit spread as soon as going to get to a 110, you're going to be down negative $640 on the board. Okay, which is fine. You just deposit, you just have to pass the time. So each day will come, the theta will increase. So does the delta. The point here is that you just wanted to make sure as soon as the price backs off, so does the profit. So does the P&L will go down. You increase the theta will jump. So each day will go by, theta is going to increase. There you become positive now. There you go. That goes your profit. You just want to make sure you just stays down. You can go down as much as it can. That's fine. Your downside is capped at 1,030 because that's the credit that you received. But you just put a ceiling on it. You don't want to have the price to go up above 113 mark. 113 is the 112 is the call that you're short plus the credit that you received. Makes it 113.03. So 113 will be somewhere around right here. Okay, so the reason why you're doing this is because if the price does go up to 110 right there, meaning the signal failed, right? Signal failed, but you have, did I change the date here? So you're down 612, 616 bucks on this one, and you got stopped out. So you took a loss of $616. But that 616, now you're up. But you gained 19,560 to 2,100. You made up a difference here. So you technically doesn't take a loss because you have the 300 shares that is going to move per point. Okay. Will offset the difference, but that's the hedge that you used. But if you don't rally and if you fall, you get to keep the $1,000. That's called hedging. You use the stop loss on a regular trade, but you just want to, because now you're receiving a credit up front. What you need to do is you just want to have to wait it out to see that if the price can stay below this invalidation mark until Friday, so I can get to keep the credit. Now, if the signal fails, you go right back to 110. You're going to take a loss here. You don't have to close, you have to close the trade, okay? Because signal is no longer valid. So you're not risking anything that huge anyway. You're not going to go down 3-4 grand, okay? You're paying normal, you're taking a $5,000 worth of a margin out of your account. So they're taking out 5,000 from you to giving you 1,030 up front to keep. The second you're going to get filled. Okay, so the 5,000 is going to get sucked out of your account. You cannot touch it until Friday, until you close the trade. And you set an alert right there as a stop loss, which is at 110. Now, if the price rallies from the current price is at 105, goes to 110, you are down 600 points. You get out of the trade. But the same one, okay, the shares will go up So you at 19,560 right now minus 21,000. 19. Oh, geez, my brain is not working today. 19,560. 110 is 21,000. Okay, so what 21,000 is $1,440 worth of a profit. Okay, from 105 up to 110. So you're actually gonna make money by giving back $600 to them. You see? Because your shares that you are holding, which is what I have 300, they're gonna rise from here. The P&L is gonna move. It's gonna go up to a 110. It's gonna pay you $1,450. But at the same time, the hedge that you just put it on is gonna lose $600 because your signal will fail here. So you giving back, instead of keeping the $1,450, you give back $600 out of the profit. So can you do that? Of course you can. This is what you call hedge. Okay? That's how hedging works. You protect your upside by doing this. Because what happens is that, okay, what if now you're 19,560 right now. So it's gonna change your entire P&L graph right there to the penny, basically what's gonna happen. This is, let's assume this trade is working. Now if the price, you're at 19,560 right now, as of right now, Monday you open up, you received a credit of whatever, 1,050. Trade goes up, your shares are included with the credit spread, you're actually making money on the way up until 110. You're gonna be up $20,380. So the stops triggers here, you close the credit spread right away. Now, if the price comes back, the sell signal stays in place and it is trying to roll down, obviously you're gonna lose money on those 300 that you're holding as well, but you only get to hedge $1,000 out of it. So $1,000 against the 300 is roughly 3 points. Because $1 the stock moves, you make $300. $2 stock moves, you make $600. $3, $900. So for the $900, basically you're close to 1,000. So you have to lose like $3.50, I would say, off a price to the downside equal to the $1,000 that you're receiving up front just to break even. So the credit spread pay you $1,000, the stock pull back 3.5 because your downside is capped at that full credit. Unless you want to, if you want to do a regular put the regular spread, a bearish one, that's a different one. You can do the same thing as well on that side. So you can just simply go here, say like, okay, 105. You want to target 94 is the expected move. So you can do, let's see, I don't want to go 104. Let's see if you do, so in here, in this case, instead of selling here, now you're buying 104. And then you sell the 94. Now you press control on the keyboard, hit sell. Now it becomes a debit spread. Now it's green, it's not red anymore. Red is a credit you receive. Green is a debit you're paying. Now you're paying for this trade. So this one here is 330. So now what's the risk profile looks on this one? Now this one is you risking $330 to make 670 bucks. Okay, so you're gonna bump it up. So now we'll bump it up to 137 negative delta. Now you long 300 for shares. Now you're negative 137. Now your delta is gonna reduce because you're coming down against your shares. Okay, what's the risk here? $1,650 debit, right? You can, I'll do 10 because you have to long 300 shares against the 275 delta. That'll leave you with 25. Yeah, 25. So you have a $3,300 worth of risk total that you're paying for it, but you're not risking 3,300. You're only going to be risking up to 110. So from here, 110, you're going to be down $1,182. You risk 3,300 with the debit that you paid. You risk $1,182. So you're down. You're going to be instantly down $1,000. But at the same time, the shares that you have is going to pay you more than $1,000 if you're going to get stopped out at 110. Okay, so you're going to simply do it this way as well instead of doing a credit. I know that some of these credit that sounds good and this and that, it freaks people out because of the margin, right? They're going to pay you a credit to receive a front, but they're going to suck up all the margin on your account. It just kind of, and some of the credit spread, if the price really moved and ripped hard to the upside, like those credit spread can hurt really, really bad. You're going to be careful what you're doing. So I know it's all about selling premiums. You can generate income. You can do this and you can do that. Yeah, it's all talk. Okay, well, I'm selling this. I'm generating income. I'm doing this. Yeah, sure. You wish that everything is that easy. There's always a risk. Okay, every strategy has a risk. There's no such a strategy has ever been on the option market. It's a risk-free strategy. I kind of know one. It has a 99.99% success rate. That's the strategy that I have, that I do it every single month. So this is the way you can do it. This, I think I would, instead of like going up crazy into this, you could rather do it this way, simple, clean. You pay the trade up front instead of you messing around with the margin. And that's it. So you can just do a hedge against this one. Now let's say you're sitting right there, 19,559. So you picked up a debit. So you're long 25 deltas now. Okay, because you're negative, because you're taking a bearish bet on this side, but you're long 300 here. So it's going to cut down your delta down to 25. So it's not going to feel much if the price will move against you. You see, your P&L up to 110. It's not moving much at all because you cut down all the delta. Now the delta is going up because this one position right there is going negative. All you're basically doing is that the price is going up. Okay, you're not making as much money. Okay, because you're hedging, right? Because you cut down your delta to minimize it, to see if you can get the downside. But if you get this downside right there, of course, your $300 share is going to get hurt as well. Keep that thing in mind, because your downside spread is only capped at 6,700. That's a lot. It's an excellent strategy for a trade. You're risking you're risking $1,000, give or take at 110. Yeah, 1,100, 1,200 bucks until this signal. So you're risking 1,236 bucks, okay, to make $6,700 on this spread. I mean, you can make it a little bit smaller if you don't want to go that wild. You can do 347. Gonna be a little bit of a I have a bigger payout, 75-30. I want to go that way. 3093 would be good. Yeah, you're just selling a little bit more deeper, that's all. The tighter the spread is, less money is gonna cost. So yeah, 94, I would leave and just to have enough juice. 330. So you have 104. So you long 104. Almost add the money. You can go down at one. You can do this. You can do 103 and 94. So now you have a 2850 against 6150. So in this case, up to 110, it's still gonna be down roughly like 1,000. Or then from here, if you come back down, end up, let's say, maxing out the spread, so 6150. So you're in this case right there. So your downside is capped at 6150, right? On this. Now, if the stock fell from 19,560 down to 94, you lose 16,200, 3,360. So you have a hedge that will make you more money. You still end up making $3,000 more versus what you're going to be losing. That's how hedging works. One side to another. You just have to decide to see, like, okay, well, if I'm going to short something, I want to protect the upside. I want to buy something, I want to protect the downside. Right? And then you just ride up. That protection of the level that where you're going to be watching and where you're going to set up the alert is where the invalidation is for the signal. That's where the invalidation. That's how you hedge. You can hedge it with spreads, with the spreads, or you can do it that way. But again, which way the price will move, we don't know that. But in the question all comes down in the end that if the price reverses, which it can, anything can happen, reverses, takes out 110, this signal is no longer valid. Basically, this signal, which is going on since 410, it still continues to the upside. So, boy. Okay. It's gonna, don't um um like mess around or something. It's just real money. I mean, you just have to learn over like how to protect your downside under a sell signal. I do it all the time. You know, I know that sometimes that I'm gonna end up giving something back, but I'm way down. Okay, well, I'm gonna give back 1,000, 1,500 a position that I'm already up over 100 grand. You really? I mean, you don't want to be that cheap. Sitting and thinking that you're sitting with $180,000 on a profit that you cannot give back $600-700 on a position by doing a hedge. You know, just, I mean, people who have large portfolios and stuff, that's what they do. But it all depends on a certain stock. But again, you know, it's earnings risk is always a huge risk that every stock has to pass through. Look at the baby oil. Johnson Johnson, we're probably gonna hit 171 next. Very close to it. CVX, right to that pink zone, 156. Travels, a little choppy back. Look at this. God, so confused. IBM got hit hard on earnings. It's a pretty nice sell signal up there a couple days before. It was right here until earning, and then okay, we can look around this thing. on butterfly and stuff. We'll learn some other day. Okay, I gotta go. I gotta go downstairs, eat something. It was raining. Let me stop this.